And welcome to everyone who is new here. I know we got the usual suspects here. But we also got a bunch more, and the reason why is because we're doing an open house today. We do this about once a month to give everyone a chance to see what we do on these Tuesday classes, because these are basically where all the magic happens, right? We build a lot of really interesting algorithms here, and kind of you get a chance to really see how all the stuff gets made within Wealth, right? So let me do a quick spiel about this. So this is our live algo building sessions. It's our open house that, again, we do for free once a month. Here's our disclaimer. Typical stuff. We're doing investments here. Please don't take any of this as investment advice and a bunch of other things. Please read over this. Right. But this is how it all works. Right. So essentially, we have kind of 5 steps that we follow every time that we go through this on Tuesday. Um, Basically, we start off. Step 1 is we have trading idea presentations, which we will do very shortly. Everyone get a chance to present their ideas. There's one person who cannot make it today, but he had a very interesting algorithm on our Discord. So I want to share the video that he created for us. So I'm going to share that in a second, but I know a couple other people. I think Ali, you had an idea as well that you wanted us to go over. So for any trading ideas that we have, or anyone else, if you have other ideas, we could share them all during this portion of the class or the sessions. Once we do that, then we're going to take a vote. You guys are all, everyone who's on Zoom is going to get a chance to vote. So that means if you guys are on Instagram or if you guys are on YouTube, join us on Zoom. Because this is going to give you a chance to participate, right? You're going to be able to turn on your microphones, you'll be able to talk, you'll be able to ask questions, you'll be able to vote, you'll be able to do all that kind of stuff. If you're on YouTube or on Instagram, it's great. You'll be able to see what's going on, but you're not going to get a chance to participate as much. I'm going to keep the chat window open here. So if you guys do chat, if you want to type some stuff on Instagram or YouTube, I will be checking that as well. But, turning on your microphone is usually a lot easier. Right? Okay, so step 1, we're going to present a bunch of trading ideas. Everyone's going to get a shot to present their ideas. Step 2, we're going to vote on which one you guys want to work on. Step 3, we're actually going to build this thing, right? So whatever you guys decide to work on, we've had a lot of really interesting things that we've been working on the past few weeks. Whatever you guys choose to do, we're actually going to build it. I'm going to be writing the code, and you guys are going to be basically saying, well, what if we did this and what if we did that? So you'll be able to check all that stuff out. And then we'll usually go through a tweaking phase for the algorithms where we will want to, what if we made this a little higher? What if we adjusted this? We'll adjust all the parameters. We'll try to get to an optimal solution. And then the last step is getting and running the code. This is only available to paying customers. So if you guys are part of our pro plan or part of our all access plan, you'll actually get the code. You'll be able to use this. We have a big library now. I think we have over 100 algorithms that you guys can choose from. Whatever we work on today will be added to that, or if we decide to improve on one, then the changes will be pushed to our library, so you get access to that whole strategy library. All right. And you'll be able to actually run these things. We've made them very easy to run. Here's a little example of our strategy library. It's all in GitHub. We make it all super simple. We have quite a few in here. This is by no means all the algorithms that we have. We have a bunch more on Google Drive as well. We're slowly moving them over to GitHub, but you can see here we do have quite a few. We have a bunch of different options trading algorithms. We have stock trading algorithms. We have crypto trading algorithms. We have a bunch of stuff. I'm actually working on a futures trading algorithm now too, which should be pretty cool. But to give you an example, let's say you want to trade this options condor martingale. It's really quite easy to run these things once you have everything set up. And it's really not hard to get it set up either. It's these days I'll run an algorithm. It takes me 2 minutes, maybe less. Sometimes I've run algorithms like 30 seconds if I have everything all set up. But basically, you can go into any one of our algorithms. You can read through basically what it's about, the description. We have this little button here that you can run, and I'll explain that in a second. We have stuff here. This for programmers. If you guys want to know all the little details, we have a bunch of stuff in here they could change, right? Including adding to databases and all that. And then at the bottom of every algorithm, you'll have the backtest, right? So here's the backtest for one of the configurations for this strategy. This is, it's cut off here, so I'm not sure which one it is. but I'm guessing this is probably our Condor, this is probably a version 6 or version 7 of this algorithm. We're all the way up to version 14 now, so it's gotten even better than this. But here's an example of a back test. It did 144% a year historically in this back test, or 182% in total, with a very low drawdown. So performed way better than the stock market did by a very long shot. 144% a year, only 12% down. I think the stock market over the same time period was down like 30% or 20% and up only like 10% on the year or something, right? So this one, let's say you want to run this one, it's quite simple. To run it, you'd click on this button here, run on Replit. It opens up in a company we've partnered with called Replit. This basically hosts your algorithms in the cloud. It's really simple as just opening or clicking on that button. It'll open up here, wait for it to load. And then once it's loaded, you basically just need to go into secrets and then copy over how to connect to your broker, right? So in this case, let's say I want to connect to Tradier. That's the broker I want to use. I'm going to copy that. I'm going to copy the Tradier access token thing here. And then I'm going to go to my broker Tradier, and I'm going to actually get that token from them, and I'm going to type it in, right? And then I'm going to go here, account number. I'm going to grab that, add a new secret, and then I'm going to go to Tradier. I'm going to actually get my account number, type it in, add secret, and then hit run, and that's it. And you have a working algorithm. So it's super easy to get up and running. We have quite a few algorithms out there. Some of them have really extreme back tests. This one was 144% a year. We have another version of this that did like 1,000% a year. We have a bunch of other algorithms out there, and we're going to work on more tonight. So that's a little flavor of what we do. All right. So that's if you want to actually get the code and run it, that's part of our pro plan or all access plan. And speaking of which, if you want to get our pro plan, it's $399 a month and $1,000 to set up initially. Basically, you're going to get access to all of these sessions that we do. Right now, you're getting for free once a month, but you're going to get them every single week that we do them. We're actually thinking about starting to do them twice a week because we're getting a lot of really, really cool stuff being built during these sessions. You're going to get access to our strategy library, which is this thing I showed you here, where we have all these different algorithms that you can choose from, and you can run them. Some of them have pretty extreme backtesting results, over 100% a year, some 1,000% a year. Those are a little bit more risky, obviously, 1,000% a year, but it happened, so it's interesting. So you'll get access to that strategy library with all that code. You're going to get access to our workshops, which will basically help you get started, help you modify algorithms, teach you how to do all that kind of stuff. You're going to get access to our trading signals, which is this right here. You can follow our algorithms. Here, for example, our diversified leverage, you can follow that. Here's a new one that we've been running. This one's actually been doing pretty well. This is our version 12 of our Condor Martingale, and it's up 4% in the past like 2 or 3 days. This one's starting off on a nice foot. There's a new one that I'm running. We have a couple of ones. This one's doing quite well too. This is version 13. This is version 14. They're all trending up nicely. I'm mentioning this partly to show you guys our trading signals. These are algorithms that we actually launched like a week ago, not even a week ago. So you can follow them in our trading signals. Today, we can also work on that algorithm if you guys are interested, kind of get deeper into this and figure out how do we make it better. You also get access to our Discord community, which is basically all this here. We are constantly talking about a lot of different interesting things, including, for example, this one algorithm that I think is very interesting for us to take a look at. This one person here, I don't know how to pronounce his name, DL Kift. I don't know how to pronounce that. I guess KK. That's his. Whenever he emails me, he says that. But 5,000% a year. That sounds pretty interesting. I know he created a video for us to watch about this today, and we could actually take a look at this. If this is real, this would be a really interesting algorithm. I don't know about you guys, but I could use 5,000% a year. Yeah, this is one that one of our community members posted up. He thought it was very interesting. He was thinking we can go through it today. If you guys vote for it, we can work on this today. So that's our Discord community. There's lots of conversations happening here. This is like a regular kind of thing. We talk about all these different algorithms in here. Here's these new ones that we launched, 75% a year, quite a low drawdown. 63% a year, low drawdown. These are those new ones I was showing you, our signals, right? Here's another, right? We got a bunch of stuff that we talk about in here. So you'll get access to that. You'll get access to our Python for Finance course and our Algo trading course as well. So you can go through all those learning materials and stuff, right? So that's our pro plan. Like I said, $3.99 a month and $9.99 sign up fee. If you're interested, check out lumiwealth.com/pro plan, or go to lumiwealth.com, and it's right on the front page. So lumiwealth.com, and right on the front page here, you'll see that you have all the different plans that you could choose from. Right, you could scroll down and see plans, and you have them all available here. We have our starter plan, which does not include a lot of the stuff that I just talked about. You don't get access to the library, you don't get access to all these things. So it's pro plan and up that gets you access to all these latest algorithms that we have. All right, so we got that. The all access plan, if you want to go all out and do get a lot of help with this stuff and have people coding for you and that sort of stuff, you can get our all access plan. Basically, it's our white glove service. We'll spend a lot of time with you. We'll modify algorithms for you if you want. We'll spend a lot of time coding with you if you need some help. You also get access to all of our course recordings, which we have a lot of different courses. We have our options trading course. We have our AI course. We have a blockchain course. We have a bunch of stuff. You get access to all that. And then you also get one-on-one hours per month, 2 hours, with myself or another developer that can basically help you out, and you get full service. So we'll spend a ton of time with you, right? That's $7.99 a month or $1,500 a month sign up fee, right? Okay, cool. So that's my spiel. Any questions around any of that? Eric says, can members run a backtest to zoom in on certain periods? Yes, you absolutely can do that, Eric. It's quite easy to do that. Once you have backtesting set up on your computer, it's really quite simple. Let me show you here. There's a date field here. You just change the dates. So this is 2020, January 1st to 2024, August 6th. Just change this, say 2022. Or 2021 or whatever you want to do. It's really easy. You just change the dates and hit run. Very simple to do that. Good question, Eric. Thank you.
What platform is this on?
This is using Visual Studio Code.
Okay.
Yeah. You could also run it on Replit as well when we do it in here. You could modify it. It's a little faster if you do it off your computer, but you could do it here as well. Right. We also do provide you a bunch of back tests. So if you want to just take a look at what we have, or during one of these sessions, we could just zoom in and actually look at that as well. And you'll see today too, when we generate these reports, every time we run a back test, you're going to get a tear sheet, which is what I was showing you there. But you're also going to get a bunch of other stuff to show you what trades happened, what happened to your cash value. You could also have like custom things to search for, like, why did we not trade today? Oh, because the VIX was too high, and we'll have like that sort of thing as well. I don't have that loaded right now, but that's very easy to like zoom in and out and open up and close. Maybe I can open one of those right now. Let me see if I can show you that. Because you can go really deep into it and break things down. But let me first find out where the heck I placed all this stuff. The development, strategies, logs. Yeah, so let me show you a couple of different things that get created. Here's like an indicators one. Here's a tear sheet. This is one that I was trying out yesterday. Clearly, this one needs a little bit of work, but that's not the point here. The point here is that you can actually see everything that's going on. So here's one chart. You could zoom in and out, right? Very easy. Why this buy? When did it sell? What was the price of QQQ at the time, right? You could zoom in here as well. Look at all your cash. This is what's happening with your cash. You can see exactly what was traded and when. Here it bought a call option. Here it bought USFR. Here it sold USFR. and you can actually track how the strategy is doing. This is the blue line is the strategy, and the yellow line is your comparison, right? So your benchmark, in this case, the QQQ, right? So you do have a lot of customizability with all these charts and back tests, right? Does that answer your question?
Yes, thanks.
Cool, no problem. And we'll probably spend a bunch of time doing that today too. You'll see when we run some back tests, we'll have those kind of results. Cool. Any other questions, guys? Okay, awesome. All right, so let's get this kicked off. So for starters, let's go through step one and let's get some trading ideas going. So what would you guys like to work on today? I know, Ali, you're mentioning here in the channel that you had an algorithm that you want to work on. We can definitely look into this. Is this something that you want to present, Ali, or
Well, you had the. I'm curious about that 5,000 percent liquidity. So if that's if there is any possibility to just check that out to see if that's real first. I think everybody would be interested to find out and just get it out of the way first because that's gonna kind of steal my thunder. So let's just get over with that one and then we can get back to this one if you don't
Okay.
mind.
Okay, cool. Awesome. Okay, so this is the one that he's talking about for those of you that are not familiar, that weren't going through our Discord. This was something that was posed to me by KK. I don't really know exactly what it's doing. I think it has something to do with machine learning, as far as I can tell. But he did make a video for us, right? Would you guys like to watch this video and see kind of what the heck he did here to get to this 5,000%? Would you guys be interested in that?
Yes,
Okay.
I would.
I give a yes vote.
Hell yes.
Awesome. Okay, so let me figure out where the heck is my email. Hold on, I'm just gonna organize my windows a little bit here and find this email. There it is. Okay. All right, so it's a 12-minute video. He said we could fast forward to some parts if you guys want to fast forward through it, but this is basically how he was able to arrive at that 5,000% a year thing. So let's see what the heck he's doing.
Hi guys, this is Kate.
And let me know if you guys can hear this too, by the way, because I'm not sure if it's gonna go through all this stuff to all the things that we're streaming to. So let me know if you guys can hear this.
Over 2 weeks, I have shared pairs trading strategy which makes use of machine learning in the Lumiwell live algo building channel. And let's look at how it goes in backtesting. And here you can see this algorithm shows this vertical line is the return for about 6 years of backtesting. It has a return of about 12 folds, and which means a CAGR of about 47%. And as you can see, even if the market, these two assets are the assets to be traded using this algorithm. And as you can see, this algorithm just move all the way up generally. And this is pretty exciting, right? I guess all of you are very impressed. And with the help of one machine learning model, this is called one of them is called SVR. Another one is called the random forest. The random forest is a little bit better. It goes to 13,000, 1,300 1,300% with a CAGR of about 50%, which is way better than the SVR. And also, this algorithm can also make use of some neural networks. But the neural network result is, I would say, is a little bit, it is very hard to reproduce the same result. So if you generate this neural network again and again, and different result will be produced. And I remember that as I run, sometimes you can get a total return of about 2,000%. That is way more than the result of the previous two. Okay, anyway, here's 3 minutes have passed, and the basic idea of this algorithm is that the target assets is this two, the QQQ and the SOXL, and the algorithm is like that. It try to make use of machine learning to predict this blue signal. If the blue signal is above a certain threshold, it will open a position to buy, for example, the TQQQ, and then at the same time, it will short the SOXL. And when the signal fall back to a certain threshold, the position will close. And as you can see, the SS1 is, let's name it as a TQQQ. So during this operation, TQQ is long and the SOXL is short. And sometime later, the TQQQ is short here because the signal wise up to some value above the upper threshold. So now the position is changed. Okay. What I did, let's see how much time. Oh, it's already about 5 minutes. What I did in this algorithm is that I identified this pair of assets is suitable for this algorithm, and that I changed the entry level. The original entry level is 2.0. I changed the entry level threshold to be above 1.4 and get some pretty good results. And so this is the notebook. This Jupyter notebook is making use of only the end of day prices to generate the backtest result. When I put this algorithm into the Lumi board lifecycle methods, it turns out that let me run this. It turns out that the result is much higher than what we did just using the close prices. Some of them, including Jim and Jack and others, think that this is crazy. This result is crazy because we think that there is a bug in the Lumi bot methods, and so what I think we can do is that maybe we can fix that bug in LumiBot, and for the algorithm itself, we can let's see what I have written here. So because this algorithm, I use the TQQQ and the SOXL, which is 3x 3x ETF. Because one of the operation is opening position is to short these 3x ETFs. So it will be very risky and will susceptible to margin call. So one of the way is maybe we can reduce the amount of opening each time we opening. Or for example, now we are using 100% of our cash to open positions. So that means 50% will go long and the remaining 50% will be shorting 3x ETF. So to avoid margin call, we may lower this amount, or maybe we just use about 80% of our cash to perform the trades, or we can even lower. Or maybe we can instead of doing short selling, we can actually long the opposite of the 3x ETF. For example, if we are going to short SOXL, we can actually do a long position of SOXS. That's to trying to reduce the risk of a margin call. Or maybe we can just trade 1x ETF and instead of the 3x ETF. And also, I have mentioned that if we try to run this code, for example, here this line is trying to initiate a new network instance. If we run it again, you will notice that this result is changed. For example, here the return is about 784. If you try to initiate this instance again, you may expect that it will give you the same result. Actually, it is not. I think it may be I didn't fully give the proper seed to this neural network, or maybe we can try to figure out how we can fix the seed for this neural networks. Anyway, let me run it for you again for you. For example, here you have 400. Where it goes? Here you have 400% something. Now we are trying to initiate run it again to build the same machine learning model. And this time it's a little bit worse than before, but I remember that the best result that I get is about 2000%. So maybe we can also make use of some techniques in training deep neural networks, such as the backing, the dropout, and regularization and early stopping, trying to maybe fit to get the best fit for the, to train the neural network to the best that we can do. He is some resource about actually this is some questions that I asked GPT, and it has some recommendation for us to improve the neural networks. So let's see how. Always about 12 minutes. I have to stop now. So hope you guys enjoy having this strategy, as you can see, the performance is so well, seems to be a timeless, and hope we can make use of this algorithm and yeah, hope everyone enjoy it. Okay, I have to stop now. Okay.
Okay, awesome. Well, what did you guys think about that? What are your thoughts on this algorithm?
Did he mention about maximum drawdown?
Yeah, the drawdown is actually here. So the drawdown is actually quite low. There's only
Yeah,
like
wow, that's
drawdown.
amazing.
Yeah. If these numbers are real, that's holy crap, that's insane.
Yeah.
Just yeah, it could be just the algorithm just created this instead of actually doing the simulation, just created this as like a fantasy kind of thing. I mean,
I don't know. I mean, I don't know if it's real or not, right?
it's a machine learning, right? It's like a
Yeah.
AI thing. So he says, just
Yeah.
let's make them happy.
Well, who
Because
knows? I mean, maybe it's really good. Maybe there's some sort of bleeding in the data. I'm not sure. It's hard to know without looking into it, right?
is it any way to run it? Do you have the code?
Yeah, I have the code. Let me get the code right
So
now.
we can just, we can just investigate it. Maybe if we can figure something out.
Yeah,
It's
so
worth it. I mean, if
here-
it's even nearly as good as this, it's worth it to look into it, I guess.
Yeah, so let me set this up here and we could just run it. Yeah, I ran it, I got the same results as something, right? But then that doesn't mean like maybe there's something wrong with it. Maybe it's like, doing something unrealistic. Maybe there's something wrong with the machine learning. I don't know, right? I think it's worth investigating, right?
Yeah, I agree, definitely.
Call this ML. I don't even know what to call this. Machine learning, or I guess we'll call it stock ML trading.
This is not even an option. It's just trading these ETFs directly, right? And they don't grow this. I mean, they are really fast growing, but not this fast. The ETFs themselves don't grow this fast. So how does it stack them like this? It's kind of hard to believe.
Yeah, let's see. Let's see what's going on here. So this is that. I think this is all the code here. All right, and let me pull over. And get a credentials file here. We don't need these anymore, but I'm gonna keep it for now. But then shows.py. Okay, so let me hit run on this. Let's see what happens. Oh. Copy this over as well. Okay, let's try running this again. Okay, so there's a back test. Holy crap, that shoots up really high. There it is. So same results as him. Right, let me pull these out because this is, I don't know why I open up in this browser. Right, so this is it. We can go through it. This is the trades that it's doing.
Yeah. What does it do?
Well, it's buying QQQ here, buying QQQ, buying QQQ, selling QQQ and SOXX. Right, so it's doing those two. Here it's selling quite a few, buying quite a few. So it seems like it shorted SOXX. I don't see it buying SOX. Oh, they're bought back SOXX. Bought it back there, bought it back there. Yeah, so it seems like it's just trading QQQ and SOXX is what it seems to be doing. Now if we zoom in on this part, this is where it really starts to take off. Before it was pretty flat. And then around here, we start to see some pretty crazy movements. Buying a
Still
lot of QQQ. Yeah.
QQQ.
My guess is that this is probably buying and selling more than possible. So it's buying 186 million shares of QQQ.
Oh my God.
Yeah, which if you had, well, I guess in this case, you have $55 million by that point.
Oh, I see.
So I guess here, if you have, okay, it starts with $500,000, right? That's for some reason he chose $500,000 to start with. Yeah, actually 50. No, sorry, we start with 100 grand.
Okay, yeah, that's
And
doable, I guess.
yeah, start with 100 grand. And then we buy 233 shares of QQQ. Cash stays low. Our algorithm, let me get rid of QQQ here because we don't need that. This is our portfolio value. It went up a lot. It goes up a lot actually here. Sorry. So we bought QQQ here, 233 shares, $50,000 worth. And then the price of this thing went up to, or the value went up to 150 with our cash still being at 50. That seems odd. Goes from 100 grand to 150, like immediately. There's definitely something wrong there. I can tell you that.
Yeah, yeah. 50% in like one day? Is it one day?
Yeah, something like that.
Yeah,
Yeah,
so
there's
yeah,
definitely something
that's a
wrong.
problem because just the Nasdaq 100, right?
Yeah, yeah.
Yeah, so no, it's not gonna happen. 50%.
Yeah, we also owned
It's not even the triple leverage. It's just QQQ.
yeah. We own SOXX as well, which I don't think is showing up here. Yeah, that seems to me like a bug, right?
Yeah,
Actually a bug that I one that actually reminds me of one I fixed last night. But no, but this is I'm using the latest code with this, so that can't be it. Yeah, yeah, all of a sudden you have this huge jump in the value of the portfolio.
yeah.
And
If you get 50% a day, then yeah, you're gonna yeah, you get 5,000.
yeah, that would make sense. Yeah. Here we sell some stuff. And then our portfolio is still at 150. Then all of a sudden it jumps up to 226 somehow. I have a feeling there's something wrong with this SOXX thing here. It seems like every time we own SOXX, the portfolio value shoots up really quickly. It shoots up by almost the value of SOXX. So to me, this seems like there's a bug here. That doesn't mean that this thing isn't going to perform well because he does have that other thing where it actually was performing well. But yeah, it definitely seems like there's some sort of bug that's at least helping it in this case. So we could take a look into that if you guys are interested. He does have that notebook that looked like it was still doing quite well, probably not 5,000% a year well, but it definitely seems like there's something interesting going on here. Gonna read off the comments here. We have impressive. Seems like the AI model is doing mostly accurate predictions. Yeah, yeah, that's what it seems like to me, right? Is like his machine learning model seems to be quite accurate for what he's doing. Yeah, tried back testing. It only took 10 seconds, seemed fast. Pairs trading. If you're trading 2 to 3x leverage index funds at the same time, you'll only be able to use about 15% of your account per trade. I'm assuming that's when you short, right, Worth? You mean shorting, because when you go long, you could own the whole thing, right? You just put all your cash into it.
How do we know it's accurate prediction from the AI perspective?
Let's take a look. He sent me that as well. So let me download that. Or did he send that to me? Oh, maybe I don't have that part of what. Yeah, he didn't send me the the notebook. Let me ask him, can you send the notebook to, going over it right now with everyone? Yeah, so that would be interesting to take a look at that notebook. But yeah, there's, from what I could tell, there's some sort of bug here, right? And that's why it's driving those returns like crazy. That doesn't mean that it won't perform well without that bug helping it, but I'd say that's a big chunk of the problem here, or what's going on here, because you could just tell, like, it's $100,000 and then all of a sudden it's 150. How did that happen, right? And then here it's 150, 150, 150, and then all of a sudden 226. It's like every time after it buys QQQ, somehow the value of the portfolio jumps by like 50 grand or more, right? So here's another big jump, right, to 226. It goes from 150 to 226 in a day, right? And then here goes from 226 to 339 in a single day. Like, that just doesn't seem realistic. Like, QQQ just does not move like that. You know, if it was a different ticker, maybe, right? Like SOXX, I also don't think it moved. I don't think SOXX moves that much either.
No, that's semiconductor. No,
Semiconductors, yeah.
there's
Yeah, it
so
moves a lot, not, you know, not
L
in a
is
day.
triple leverage, but not even that won't move that much. No.
Yeah, and it's been a very good year for it. It's up 32% on the year.
Yes.
Right? So this thing is not moving 50% a day. There's definitely a bug here. Right? So the question is, do we investigate this bug more? See if this thing still does well without that bug, or if you guys want to focus on something else. All right, so that's that algorithm. It sounds interesting. I really liked when he went over. It's too bad he didn't share the notebook, because I would love to go over the notebook and see what's going on there. I'm wondering if maybe he's trying to predict. A lot of people when they build machine learning models, they'll run the machine learning model over the same time period that it's trying to predict, and it's like, obviously it's going to predict it well because you're using the exact same data. So I don't know if he's doing that, or what's happening here. We can read his code over. Here goes training start 2014, training end 2018. Okay, so it trains over that time period, and then, okay, so that seems fine here. That doesn't seem to be an issue. But there's definitely some strange bug going on with how he's trading it. We'd have to investigate what that is. Get cash. I'm trying to see if there's anything standing out here that looks like a problem. Yeah, I don't see anything unusual stick out right at first glance. But okay, so that's one algorithm that we could work on today. If you guys are interested, we can go over this today, see what's going on here, see if this machine learning actually has any legs behind it. I don't think we're going to get 5,000% a year, but judging by how accurate that seemed to be, it seems like it would still be pretty profitable as well. Maybe not 5,000% profitable, but I think could still have some interesting things behind it. Okay, so that's algorithm one. Ali, do you want to talk about yours?
Yes, I can talk about it. Yeah, I mean, we can work on that if you want, but I wasn't really ready to go into the details on that. But I can talk about it if people want to get into it. We can get into it definitely. So basically, this is, we started talking about debit spreads and basically running debit spreads. And then I had an idea that I put on the Discord to do a debit spread for longer expiries, so it would be like for 90 days, and basically do a 50 delta for the long, and then a 10 for the short, and then just so 90 expiry, and then just close it after 60 days, no matter what, just close it. So that would be your stop. Your stop loss would be 60 days the time, not any specific profit or loss. And then take profit at 25%. And that would ensure that you keep the gamma all the time. So basically you take the profit at 25%. If your criteria is still good, you buy it again at the same time. You get a fresh 50 delta right there, and you get a fresh really high gamma. You keep going like that, and you get the best rate of return as long as this thing is going up. Now, the algorithm, the way it was that I saw it, it performed very well for this year. So it did like 70%. I mean, I checked it out last time, like a week. And actually, they did this with real money too on Option Alpha. And so this is one of the rare things that has performed well there with real money. So I thought we check it out. And I think Jack was gonna run that. Then I figured, well, if we run it over, like, run a back test over a long time, we probably will run into some trouble with this. Because when you do this over a long period, you get into these periods that you have very high wicks, and then these calls are gonna have problems, right? Usually you have a drawdowns and things like that. Then I had run some stuff. I said, "Can you show that Discord that that thing that I put on Discord, Rob?"
Yep, sure. Here, let me go to it. Okay, so he says he shared the major list. Okay. Let me just share this with really quickly. Just one really quick second here. Just gonna saw this message. I'm gonna forget. Okay, so the one that you're talking about is this right here, right?
Yes, sorry, I was on mute. So basically, this is what the algorithm that I put together with debit spreads again, but these were a lot faster. So these were short period, like a couple of months expiring, and they were also a different kind of. So this is like 7 different ETFs, and some of them are not very liquid. So on the paper, you see how well they performed. And this is basically beta balance. So juggling between 7 different ones, and I show you the ones that I'm proposing to do today. But when I did the same thing, you see, this is also crazy. So in 4 months, it's a couple of $100,000 investment. It's grown to 3.2 million. But this is also fantasy, right? So this is also fantasy because some of these were not liquid enough. So when I try to do this on Trader, the way they close on their paper trading, on Trader, they wouldn't close because they were not liquid. So instead of actually closing fast and get that return that I wanted, they wouldn't close and they actually expired and lose money. So it was so bad that instead of performing like this, ended up losing money. And so I ended up experimenting with real money, and I just stopped it on the real money part. But I figured that if we do the same kind of thing, longer run, with like this 90-day expiry that I was talking about, and do these, and do with more liquid ETFs, we would have better chance. Because that's the same idea, basically. And the reason it goes so smoothly is because these things kind of help each other, kind of hedge each other. They're really high return. But wherever there is a drawdown, basically the other ones are kind of going up. So I'm going to show you a little bit. Can I share?
Yeah, sure. Go ahead.
Okay, so I got to show you. It's kind of chaotic. Can you see this?
I can't see your screen right now. No. Let me see. Maybe I'm still sharing, so I'll let you share.
Okay. Can you see now?
Not yet.
I'm not seeing yet.
Yeah.
Okay, let me see here. Share. I see share. Okay, here. Open system setting. Okay, oh, it says. Oh, I have to go to my system.
You might have to give it permissions or something.
Yes, yes, I gotta get. Let me see if I can do it quickly. Okay. Share. Not yet.
It's slowly showing up. It's a black screen, but something. I see your mouse moving.
You
Oh, but it's
sharing
all black. Are you on a Mac?
on a Mac? Yeah. Where's the old Mac? Maybe the
Oh, there you
problem.
go. Now I can see it. There it is.
Is it working?
Well, whatever, I mean, when you got out of this, whatever this is all black. But I can see the rest of your computer screen here.
Okay, hold on. Do you see this now?
Yes.
Yes.
Okay, great. Okay, that's what I want to show you anyway. So this basically is the ETFs that I'm talking about. So it's SPY, which you will know, SPY. TLT is bonds, right? Long-term bonds. And let me try to close this one. Okay, and then we have gold, GLD, which is ETF for gold. XLV is for healthcare. IWM is ROT 2000 or Russell 2000, ROT. EFA is for emerging markets. XLE, and these are very carefully chosen. Just doing some research. So these are emerging markets. XLE is energy, and TBT is also the reverse of TLT and 2x. And both of these are very liquid. So these are much more liquid than what I was running. And if you look at these, you can see that these are really non-correlated. So each goes their own way. So when one of these is going really fast, the other one goes slower. So the performance is going to be kind of mitigated when one is not performing well, the other performs better. And so what we are going to do is basically when the moving average, 21-day moving average is sloping high. So we're going to catch that trend basically. When it's sloping high and the underlying is above that moving average, we are essentially going to buy calls, right? Call spreads. And at the same condition, like 50 delta and so on, and with the same expiry and so on. And when the moving average is sloping down, and we're going to buy put spreads, right? And then I kind of run it by ChatGPT, and it loved the idea. And so everything works with that. But for the puts, it was saying that puts move much faster. So instead of like 90 days, we should do probably shorter time for puts. So for the puts, it's saying just go ahead and use like 60 days expiry and just cut it loose in 45 days. That's the only difference. And then also puts are more expensive. So you buy the delta 45 instead of 50 and 45.5 instead of 50.10, something like that. So we can play with those things in kind of in more detail later. But so basically we're gonna have a loop over all of these. And if we don't have any of these, then we're gonna look at the moving average. And if the moving average is sloping higher and basically the underlying is above the moving average, we're gonna go ahead and buy a call spread. And also, if not, then we look at the 13-day moving average for the put. And if it's sloping downwards, basically, then we buy a put 45 and 10. and then cut that loose after 45 days. So 60-45. And for the put, we can also try like shorter times too. We can play with the put. Put is kind of one of the things that is kind of more experimental. We can do more experiments on that. So you can see, like, even if you go to this crash in 2020, you see even when that happened, see right here there was a crash, but you already had some calls there that would cover up for you there. And also here, way before that crash happened, right here, you had puts here that would cover those, right? So here you got caught by surprise right in, was February 20th or whatever that was. But you already had a bunch of hedges just by the way this thing works. That would hedge you. Now, you would have a little glitch because of this, right? You would have a 10-15%, right? But it wouldn't be as drastic as, even if you had SPY then, you would have like 35% or something drop. But this it is kind of self-hedging, but also each of these individually kind of grow so fast that that will grow really fast, as you can see on the other thing that I showed you on Discord. So I think this is something that actually is safe enough to put, it's like kind of diversified and safe enough to put good chunk of money in it too, once we, kick the tires and make sure that it works. So, and it's really easy to put it together. It's just, just running a spreads, and for the ETFs, it's just a loop, right? You just go to a loop, make sure you don't have this already, and if you don't have it, just check a couple of things, and you just buy either call or put, and then you check if it's whenever the time comes, you just close it, or you take profit if it's 25%. Now, also on the 25%, we can try more than that. I mean, 25% has worked very well for that other thing that they're running on optional for, but we can try up to 50%, and it might even work out better. So those are like parameters that we can, like we always do, we can kind of play with those things. So this is pretty much the idea. It's pretty simple, but I think it should be something that's worth giving a shot.
Awesome. That sounds very interesting. Yeah, what was it? You went from 100K to 3 million? What was that number?
Yeah, for that one, yeah, like I said, it doesn't work in real broker account, but yeah, that one, it's a couple of $100,000 and it grew to like 3.5 million. It's right there on Discord. So, but I mean, this year is stretching it. So if we can do the same thing over like a couple of years, that's still amazing. It's gonna be really good, and it should be like about 100% a year, something like that. I think something like that. But we gotta back test it and kick the tires, and the way we do everything else.
Yeah, for sure.
Then another, yes, sorry, go ahead.
No, sorry, go ahead.
Yeah, I said another thing we can do is maybe 7 or 8 is too many. I mean, 7 or 8 is just cover a lot of grounds. But we can start with like 2 or 3 and see how they do, how much drawdown we get, and then add. And also there is an option, if somebody wants to use this, they have an option to add more, or just use 2, 3. It's just like depends on how much risk you want to take. And it may be that if you use fewer, you get better return on investment, a little bit more glitchy. If you use more, you get less return on investment, but it's smoother. So, it will be very flexible, basically, in terms of what you can do with this. And also, the other thing is how much profit you want to take. You want to take 50%, 25%, and that may actually make it more flexible in terms of risk reward and things like that. So those are a lot of things that we can experiment with.
Yeah, that's definitely very interesting. What I'm thinking is, I know Jack's been working on this. He's been working on like a spreads algorithm. We do have a rolling calls. I've actually been working on because you got this idea in my head of buying put options out of the money and rolling those over, and then at the same time owning something like TQQQ. You got that idea in my head, which I think will actually perform quite well. We'll see when we run the back test, but I've been working on that the past few days and kind of improving our rolling calls algorithm. We could probably add this into the rolling calls algorithm. I think spreads would be quite a bit of work to add, but if you're okay with just buying the calls or buying the puts, then we
Well,
can probably knock this out pretty quickly. Yeah.
well, the idea of this, the main idea is for this to be beta balanced. And to be beta balanced, you gotta have puts and calls, both.
Yeah, we have puts and calls. I'm just saying not a spread. Just buy a put or buy a call.
What spreads are only enhances it. Spreads, I mean, what's the difference? I mean, the spreads you just sell another. It's just you do a multi-leg, right?
Right. Yeah.
Because the only thing that a spread does improves your risk return.
Right.
So the call basically what call does is less risk reward.
Right.
When you have a spread, you cut your cost, and so you get more return on lower spending, because you want to take 25% fast, right? Quickly. So you spend less and you get your 25% faster that way. That's the idea of doing spread. If you just buy call, the call is going to be more expensive. So you get your 25%. It takes longer to get it. That's the idea on that.
Right. Yeah, that makes sense. Yeah. So what I'm saying is just, if we could do it with just calls and puts, then that's actually not a hard thing to build. Like we could build that today. If we had to do spreads, that's much more complicated. But just buying calls and buying puts, that's something that's realistic. I think we could get done by tonight.
Well, you can start with that, and then we can build on it. Yeah, if you want to do it, yeah, that's fine.
Yeah.
Either way, you guys don't want to do.
Yeah. Yeah, that's what I'm thinking. Okay, cool. That sounds really interesting. I like that idea too. I think there's a lot of potential there. I know KK or DL Tift, I think are you still here? Was going to ask you to go over the some details. So I saw him join, but then he left. I don't know when he left, but okay. All right. So either way, we have two algorithms here, right? One of them, initially we're thinking something like a 5,000%. There's clearly some sort of bug going on with it. We'd have to explore what that is. Figure out, what's going on with this, and is this still going to make a bunch of money without that? And then we have this other one that Ali is talking about. One that we've also been working on for a while is our Condor Martingale. Oh, there he is. Okay. Awesome. Hey, welcome back, KK. You're on mute. I don't know if you're trying to speak. He's here, but not speaking. Okay. All right. So we have those two algorithms. Third one is, we've been working on this Condor Martingale for a while. We could keep working on that. I have a couple of them running here. Some of them are actually starting to do quite well. I think that's pretty interesting. There's the other algorithm we talked about with buying put options. I think that's a pretty interesting one. At least for me, I find it pretty interesting because I like having algorithms that do well in downturns as well. So that's why I'm kind of interested in doing that one. That's what I'm personally working on. I think if we were to work on this rolling calls thing, we'd kind of get all of that together, right? Because there's a bunch of stuff that like we could just add features to this. We can add that. Oh, there we go. Hey, KK.
Okay, hi guys. Hey, hello.
Hey.
Can you hear me? I'm traveling in a metro system.
Sorry, what was that?
I'm traveling to work in a
Oh, you're traveling
metro.
for- Okay. Yeah. Yeah, you're in China, right?
Yeah.
Yeah, awesome. Very cool. So yeah, so we went over your algorithm, by the way, and there's definitely a bug in it. I could tell you what the bug is that, well, I don't know exactly what the bug is, but it's easy to tell there's a bug. If you look at, and are you seeing my screen right now?
Yeah. I
Yeah.
can see that. Can you hear me? Yeah.
Yeah, I can hear it. Yeah. So you can tell there's a bug because here's your portfolio value at $100,000. And then as soon as you buy, it's a little, I'm gonna, yeah, there you go. Thank you. So as soon as you buy TQQQ, or actually it seems like you buy SOXX and QQQ, I don't see both orders going through. I only see one. Maybe it's just behind this one. That's possible. But either way, after that purchase, it goes in one day on January 2nd from $100,000 to $150,000 the next day. So that is clearly not possible, right? There's a $50,000 jump in one day. And then from here, same thing happens from Gen 8 to Gen 9. It goes from 150 to 226,000. So a $75,000 increase in a single day. Not sure how that's happening. There's definitely some sort of bug there. And again, here goes from 226,000 to 339,000. So increase by 100,000 in a single day, which again is not possible with these things here. My guess is that there's some sort of, and again, 339 to 513, like there's definitely some sort of bug here, right? My guess is that there's something happening with the cache, right? Where we're seeing our cache not really moving, or actually it's going up here. Yeah, actually, either way, I don't know what the bug is, right? I'm trying to make guesses here, but there's definitely something going on here, right? Because that is not possible with these ETFs, right? So we could explore what that bug is, but I also thought it was really interesting what you shared, because this leads to a 5,000% return, which is obviously really interesting, but I don't think that's realistic because it seems like there's a bug here that's causing that. But what you shared, and I don't know where you shared this. You said you shared this into a bigger chat or something. You said you shared this to the major list. I don't know what you mean by that. I guess you mean this chat. Maybe you shared in here somewhere. I'm not seeing anything.
Oh, I mean, Jack and Jim and Stacy and Lotte.
Oh, you shared with everyone else. Oh, but you didn't share it with me. Okay. Yeah, because I don't have that code, so I can't run that code. I don't know if one of you guys has it and wants.
Did you? Did I send you the code this morning in the Discord? A direct message.
Yep. I'm looking at it now. Maybe this is it. This is cut off, but it seems like the right file name. Let me see. Oh, maybe this is it. Okay, there it is. Yes, I got it. Okay, so we have all this stuff. Let me set the kernel to be the right one. And then stats models. Let's run Y Finance. That's reinstalled. Torch summary. I don't think I have that. Stats models. And then we'll run this. We'll run this. Processing, tail, download. Actually, I'm not going to run this. I'm just going to go over what you have because you already ran these. So spread using difference of lot. So you're basically pairs trading. You're trading these two pairs. One long, one short is what it seems like. I don't know if I'm correct in saying that, but it's what it seems like to me here. We have the models. We're running all the models. And then here's what you showed, the Z-score. I don't know what the Z-score is, what you're trying to predict here. But
The Z score is actually the normalized price of the spread. Actually, the spread is the difference between the two x-axes. But in the calculation of the Z score is the mean
the mean is calculated, is predicted by the machine learning model, and the standard deviation is also derived by the machine learning model. Yeah.
Oh, I
If
see.
you scroll up a little bit, or maybe a little. Here, yeah. Let me see. Under the else, after finishing the else, the next two lines. This is how few more lines. Yeah. Here, this is the definition of the C-score.
Okay, I see. So the difference between the two divided by standard deviation. Okay, makes sense.
The spread is the difference. The spread is the difference, but the test prediction, this test predict is outputted by the machine learning model.
Okay. I
Yes.
feel like I understand. So it's basically how is the spread doing versus history, right?
Yes.
Like historically, I guess 0 would be that's how they normally have been historically, and then maybe -2 is 1 is greater than the other, and then +2, the other one's greater than the first one. So it seems like pairs trading, and you're trying to figure out.
It's something like a mean reversion.
Okay. And SOXX is what? SOXX is so you're looking at the difference between semiconductors and QQQ. That's what you're looking at. Right? Because asset 1 is TQQQ, triple leverage QQQ, and then the other one is SOXL, which is a semiconductor. So how are those doing versus each other? And if they go out of whack, then you short one and buy the other, basically. Am I correct in saying that? Oh, you dropped out. You're back in.
Okay.
Yeah, no problem. So I was trying to paraphrase here. So it seems like you're looking at TQQQ and SOXX. So TQQQ is the triple leveraged NASDAQ, and then SOXX is a triple leveraged semiconductor. And you're saying, how are those doing versus each other? If one is greater than the other, then it's going to be down here. If the other one's greater than the first one, it's going to be up here. So we're looking at how are those two trading versus each other, and trying to get them to come back to, I guess, 0, which would be the mean, right? So in this case,
you're right.
yeah, okay. So then we're selling one and buying the other, right? Okay, that makes sense to me. So semiconductors versus the NASDAQ, right? Okay. That sounds interesting. This graph definitely looks really interesting too. If we go from 1 to 12, that's a pretty big return, if that's correct, right? We're getting a really nice 50% a year, right? I think that's more realistic than the 5,000. The 5,000 looks like there's some sort of a bug. I don't know what the bug is, where it's coming from, or what's going on. We'd have to look into that. But this seems like a more realistic, like a 50% a year, or maybe 100% a year, or something like that. Seems more realistic based on what I'm seeing here, at least, right? Do you think that's fair to say?
Yeah, I think 50 to about 60 or maybe 100 is possible. Yeah.
Okay, cool. Okay, so we have these two algorithms, guys. So we have the one that Ali was talking about. We have this one here that we can work on. So to recap, Ali is talking about buying spreads. I guess we would just buy call options or put options depending on
Moving average.
the moving average. Yeah, so depending on the moving average, we're going to buy or sell. right? And then we can own a bunch of different assets to diversify. I think it's a pretty interesting idea. The other one here is we're doing pairs trading between semiconductors and the NASDAQ, right? So I guess SOXX is, I guess this is not leveraged, SOX. Yeah, and then SOXL, I guess is the leveraged version, right? SOXL, yeah, 3x leveraged. Okay. Yeah, this one moves a lot more. Okay, so we can do those two things. We also have some algorithms that we've done in the past. So we can take a look at our Condor martingale. This one's been performing pretty well lately. Or we could work on anything else. Anything else that you guys would want to work on today?
Oh, sorry, I need to go off right now because I have arrived at my workspace. Okay.
Yeah, no problem.
Okay. I will see you. I'll
Thank you
take
for
a look
joining.
at the recordings. Okay. Thank you.
Awesome.
Bye-bye.
Bye. Anything else you guys want to work on? I'm going to put together a little survey to send out. Okay, so let me put together a survey here and say, what do you want to work on? What to work on? Right, the first one will be machine learning pairs trading. The other one, we would say moving average.
The beta balance, the best description is beta balanced ETF,
Okay, beta balanced ETF trading.
multiple ETF put call.
ETF put call. So beta balanced ETF put call
Trading.
Yeah. trading. Okay, cool. I got that. Then we have our Condor martingale. We can always work on that. That's something we've worked on for a while. I'm just going to put that up there. Anything else you guys want to go over? I'm going to throw one more up here. I don't know if you guys want to vote for this or not, but rolling puts plus TQQQ. I'm probably going to work on that myself personally anyways. It's pretty easy to do. Ellie, you got that idea in my head, so now I kind of want to try that. So let's see.
If you do it, yeah, just I'd like to work on that too. I mean, here we can share it sometime.
Yeah. I mean, even if we don't work on it today, I'll probably work on it tomorrow or after tomorrow and put it up. So, but I just want to throw it on the list. Cool. Anything else you guys want to work on today? Okay. So let me save this. Send out the poll. There's the poll. Okay. And let's take a quick break. You guys can vote on this. I'll give you guys a good 5-10 minutes, and then I will be right back. I'm gonna go grab some water, use the bathroom, and then I will see you guys back very shortly. Right. So please vote on that. We got a bunch of people voting. There's still a lot left. We have 18 people that have not voted yet. So okay. All right. I'll see you guys back in a second. All right, hey guys, back here now. We still have a bunch of people that did not vote. There's still 7 people that didn't vote. So I'll give you guys a few seconds here. So if you want to actually vote, you can click on, I don't know where the heck it is. Yeah, if you go under more polls and quizzes, you can actually vote on this. But we're gonna close this up in a second. We still have 6 left, 6 people haven't voted. I'm gonna read what you guys wrote here too. Joel says +1 to using SQQQ or SOXS. The bug looks like it is around going short. Yes, I think that is likely the case, that there's some sort of problem with shorting, where maybe the cache isn't being collected properly or something like that. I'm not sure what it is. We'd have to figure out what that is. Worth says, what's yours called? I'll vote for it. Okay, all right. Let me shut this down. And anyone want to take a guess on who's the winner? Okay. Here is the outcome. We had 7 people vote for this machine learning pairs trading. That's a number 1. Ali, you came in 2nd place with your beta balanced put and call trading. I think that's really interesting. Actually, what I think could work quite well is I think Jack said he's joining next week, and we could actually go over this with Jack's algorithm because he has kind of things set up, I think, to do this in a much easier way. So maybe this even makes sense from that perspective. But you came in 2nd there with the beta balanced ETF. And then 3rd place came rolling calls plus TQQQ. And thank you guys for voting for that. That's a nice vote of confidence. I barely even told you what it was. But I guess that struck a chord. I think it's pretty interesting. I'm going to work on this anyways tomorrow. Basically, it's an algorithm that owns TQQQ the whole way through and then just buys put options waiting for things to blow up, right? The reason why I think that is because TQQQ makes a lot of money by itself, but has huge drawdowns. So buying put options when things fall, I feel like would get rid of those big drawdowns. So that's kind of my personal little interest. Simple algorithm. I think we knock it out in like a day pretty easily. But glad that you guys thought that was cool. And then we have our Condor Martingale, which is one we've worked on for a while. We had 1 vote for that. Okay, cool. So that being said, let's get started on the one that you guys voted for, right? Very cool. Okay, so I have, why don't we get this all started here? I know KK, when you made this, you started this with diversified leverage. I think it's quite different from diversified leverage now, so we created a new one and we put this here. I'm going to share this to GitHub as well so that you guys can see what's going on, and so I don't forget to do this because I have been known to forget that at times. So I'm going to share that right now just so we kind of get that kicked off. So add local repository. Actually, maybe we should rename it now that we know stock ML pairs trading is what I'm going to call it. ML pairs trading. Okay, and we're going to choose from here development, strategy library, stock ML, stock ML pairs trading. Why did it not get renamed? Running file rename. Why is that taking so long? ML pairs trading, there it is. And then, oh, wait a minute, I gotta do some smaller things here. I'm gonna get our get ignore over. I'm gonna get a replit. I'm gonna get license. I'm gonna get our readme, Pi project, remove icons. We don't need that anymore. I could just totally delete that. And I'm gonna copy this stuff. I'm gonna move it over as well. Copy, paste that in here. This will be all set to also run this thing live. So I'm going to add that in, create a repository. We added all that stuff in. It did not include any of my sensitive stuff. Very cool. I'm going to publish this up. And we'll have that there. Okay. And then once this is published up, I'm also going to open this up on GitHub to change our README up, just in case someone wants to run this and something goes crazy. Change that there. Change that there. Gonna get rid of our strategy description. And I'm going to push that up. Okay. All right. Okay. So now this is on GitHub. So if you guys want to follow along, actually, one more thing I have to do. I just realized to give you guys access to this. For anyone who's on the Pro or All Access plan, I'm giving you guys access to this right now. So if you guys want to follow along even, you'll have the ability to do so. So I am basically giving everyone here access. If you're on the Pro plan, call this stock ML pairs trading. Okay, it's there for anyone who's on the Pro plan, and now All Access plan. I'm going to add that as well. Pairs, stock, ML pairs trading. There we go. Okay, so if you guys are on the Pro or All Access plan, you will have access to this code as of right now. Okay, cool. So now that we've done that, the next question is, what the heck is this bug, right? I think that's probably the first thing that we should fix. Considering that is making such a big impact on this, right? There's clearly something wrong with this, right? So we could figure out what is wrong. Everyone seems to think it is the shorting, which makes sense to me, given that we don't have a lot of restrictions around shorting. So I'll just clean this up a little bit here. Stocks, we'll move that up. Actually, we can keep that. After market closes, I'm just cleaning things up a little bit here. I know this feeling when you like go through code and you're kind of just running with it and, you know, a little messy around the edges. I just want to clean that up first. Okay, cool. So here is the algorithm, nice and cleaned up. I'm going to push that to GitHub too. Clean up. So let's first figure out what the heck this bug is, right? So it happens very quickly. It happens on like day one. So why don't we just run this thing in debug mode and we just figure out what the heck is going on. All right, so I'm going to go 20. This is 2020. Yes, 2020. And then we'll go to like January 5th or something. And then we could actually watch what is happening here. So this position 1, Z scores. Only buy if we don't have a position yet. And then here's our submit order. There's another submit order, right? Buy and sell short. Okay, this could be the problem because it should be just sell. And then here is another submit order. Here's another submit order. And I guess this happens when we're in a -1. This is a +1. This is a -1. Okay. So we can see what the heck is happening here in each of those situations. So I'm going to change sell short to sell. I'm not sure if that's going to make any difference in our back testing. Usually sell short we use for specific brokers. They want us to use sell short instead of just sell. But here we ran this pairs trading. It goes from, whoops, we'll go back. Goes from again this low amount to 100K. 100K, this is actually not even far enough. Let me go further. We'll go to, let's say, the 10th of January. Okay. You go 100 grand, 100 grand, 100 grand, 100 grand. This is actually looking proper. Maybe the problem was that we're using sell short to begin with. Maybe that was the issue. Let me do this for longer. Let me go until 2021, let's say. Maybe that was the entire issue. That we're using sell short, and sell short doesn't actually work properly in backtesting. This is looking more normal. There we go. This is a much more normal looking backtest. 2024, let's go longer.
Can you share screen, bro?
Oh, I'm not sharing my screen. I am sharing my screen.
I can't see it.
I see the
If
screen.
you go to Zoom, sometimes you have to click on the spot. But I am sharing my screen. Is anyone else having trouble seeing my screen?
Oh,
Were you able to figure that out, Oli?
I'll figure it out. If everybody is okay, I'll figure it out.
Watch. Actually, how about I'll stop sharing and then I'll share again. Maybe that'll help. Does that
Oh,
work?
now I can see. Oh, okay.
Okay, perfect.
I can see. Okay, great.
Okay, so the bug seems to be that he was using sell short instead of sell. Should be just sell, not sell short. Sell short is used only really for brokers, right? Certain brokers require us to send them sell short. So maybe we need to do some sort of conversion when we're doing. I'm gonna make myself a little note on this, that's a bug in LumiBot. It's a pretty simple bug to fix, I think. We just have to basically say whenever we say sell short, just convert to sell. So I'm going to make myself a little note here. Bug sell short in backtesting. And I'll get to that at some point. Or if someone else wants to kind of look at that. But that's a pretty simple one. So this is what it looks like without that bug. Very, very different story. All right, so here we have a 4% return, quite a low drawdown, not a bad ROMAD, definitely nothing to write home about, 4%. But this is probably now because we're not actually selling or buying enough, is my guess. Right, so here we have current cash over 2, get last price. Let's see how big of these trades are happening. So QQQ, 50 grand, sell socks, 50 grand. So 50-50, which I don't even think is possible, by the way. If you're short selling, you're not gonna be able to short sell 50 grand of socks. The most that you can short sell on a pretty liquid stock is 30% of your portfolio. $50,000 is definitely not going to be possible. And something like socks, they may even reduce it to like 10 or 15 or 20%, depending on the broker. So this is definitely unrealistic. Selling short on both. But yeah, this is what it looks like with the bug fixed. So what do you guys think? What are your thoughts on this?
4.1%.
Yeah,
Not as interesting.
definitely not as interesting, that's for sure. Yeah.
Yeah.
So let me push this up to GitHub. So you guys have it. A bug fixed. So short sell bug fixed. That being said, we still have something here that looked pretty interesting. The way that he actually did it here. We got a pretty nice result. I don't know what the difference would be. I guess here we're using QQQ and socks.
Wouldn't that have maybe some other bug or same bug?
No, I think this is bug fixed. I don't think there's any bugs in this.
No, on the other one.
Which other one? Oh, this one?
Yeah,
Yeah, I don't know. This is in a Jupyter notebook, so there's a bunch of things that could be happening here. I don't know. We'd have to go through all the code. And I'm definitely not a machine learning engineer. I know how to do machine learning, but like, you know, there's possible some stuff to happen here. So he runs this negative or positive. Returns for 3x. Right, if we use the 3x symbols, right? So if we used instead of socks and QQQ, if we used instead like a leverage thing, stocks here, parameters, stocks. I love how this uses diversified leverage, but it doesn't actually use any of diversified leverage. I'm going to delete this because this doesn't make sense to be here. It's not using any of that. Entry threshold, exit threshold, train start, train end. Stocks 0 and stocks 1. So it's grabbing them from here. Where's that? 0 and 1. So if we went, so this is, I think this is actually using TQQQ. Is that? No, it's regular QQQ and socks. And historical prices on those two. And then I guess when we're trading, it's using stocks 3 and 2. So if we were to change these, we can go this and stocks L. This is with the triple leverage stuff. Looking more interesting, just at first glance. I don't know if a broker would actually let you do this, but this seems more interesting. We could also go, what is the 3x bear? Instead of selling it, we could just buy each, and that I think is actually more realistic. I think he brought this up to me that we can use what's that other symbol? What's the 3x
Socks S.
socks S?
Yeah.
Okay. SOXS. Semiconductor bear. Okay, perfect. So this will actually allow us to do this. So if we go socks S, and instead of sell, we go buy. And here also buy and buy. Maybe if we run this, this seems like it'd be actually realistic to do. But the results are quite different. So this is trending downwards. Yeah, for some reason I've noticed a lot of these 3x bear ETFs, they don't tend to work very well. Shorting or buying puts or something like that, I've found to be much better ways to go short. And this seems to be another example of that. So SOX S and TQQ don't seem to work. If we go SOX L and we're shorting it, this is more interesting, right? 15% a year. It's pretty stable, pretty low drawdown. The problem, though, is that no broker is going to let you short SOX L with half of your account. Or I don't know, maybe they will if you have a special relationship with them, but no normal person would be allowed to do that with any broker that I know of. So this seems like an interesting result to me, right? If we could somehow leverage this up, this could be interesting, right? But what do you guys think? You know, would you like to try something else with this, or any ideas that you guys have?
I mean, why would you want to take all that risk for 15% a year?
Well, what I mean is that the ROMAD's actually not too bad. It's a 1.5 ROMAD. So what if we triple leverage this, right? What if we use options or something and trade this instead? Maybe we go from 15% to 60% or something like that. Our drawdowns would definitely go up. Maybe that would be something that could work. At least that's what I'm thinking, right? Like, what if we bought the options, right? Yeah, options with limit orders. Yeah, that's what you guys are saying. Options with limit orders. Yeah, and let's go. Yeah, that makes sense to me. I mean, if you guys want to try this with options instead, right? Maybe that makes sense. What else are you guys thinking?
Yeah, instead of shorting, might want to try put, right?
Yeah, we could buy puts.
That's less risky also.
Yeah, I think there's a lot of advantages to that. The problem is though, is that options can have very different payouts than this, right? Like then you have to worry about the VIX and you have to worry about a bunch of other stuff. So there's a good chance that that does not work. But maybe it does, right? I mean, there seems to be a pretty good relationship here. You know, when it was right quite a bit here. It was right quite a bit here. It was right quite a bit here. You know, at least there's 3 points in history that this ratio paid off. And then there's a bunch of blanks, right? And then I guess when it loses, it doesn't lose that badly, right? So that could be something we could try, you know, like an options based thing. Any other ideas you guys have, or would you want to work on something else? Let me know what you guys are thinking.
How many times it's buying during this time period? 4 years, right?
Yeah, it plays quite a bit of
Well,
order.
how many times? A
Quite a-
lot of times, right?
Yeah, a lot of times. It does a lot of trading actually.
Oh. Well, I guess is the algorithm using specifically these ETFs for some? I mean, does it use these ETFs to do its thing? I mean, if we use options, wouldn't it mess up the way algorithm work? I mean,
Why do you ask that?
well, I mean, you want to just use the algorithm instead of buying QQQ, buy the like the call for QQQ. Is that what
Yeah.
you just change that?
Yeah, that's what I'm thinking. Yeah.
Yeah, I mean, it doesn't hurt to give it a shot. Yeah, and
Okay.
then buy the put for the instead of shorting, buy the put.
Okay.
I mean, if
So-
it's not too much work, we can just give it a shot.
Yeah, I don't think it's a ton of work. All right, we'll probably want to switch this back to just QQQ and stocks. Those are two original ones. And then maybe we add in a parameter that says it's called use options or something. Set that to true. And if we use options, we just use options. I don't know where he's loading variables here. Load parameters. Start and ML model, and then we go use use options. And if use options is set to true, there's a lot going on here. I don't know what this is. I'm gonna clean a bunch of the stuff up here. Calculate how much we can use of each thing. Current cash over 2. Get last price. So this is calculate how many shares we can buy. This is buy asset 1. And this is calculate of asset 1. Right, and then we can go calculate how many shares we buy of asset 2. This is pretty messy. Okay, so we have that. I'm just cleaning this up a little bit here. Okay, so this is kind of how it looks like for stocks. Okay. So now what we need to do is we need to flip this from being stocks to being options. So we can go if use options, and then this is else. Right, so this is the else case that's buying just stocks. If you want to use options, then create the option asset for asset 2. We'll go option 2 equals asset is this even loaded here? Nope. Yeah, load an asset. An asset for an option. We're gonna go. What are the different things here? Loading. What was some more of our other strategies? Asset. This is what it looks like. Underlying symbol. Expiry date, strike. Right, and the question is, what expiry date do we buy to? My guess is we probably want to buy something a little further out.
How long usually does it take for them to sell it on the stock on the ETF?
Things happen pretty quickly. Turnover happens pretty fast. Like a day or 2 or 3.
So maybe a month, then maybe
a month.
Maybe 4 weeks to give it some runtime.
Okay. Okay, so let me pull in. I started using this components thing that that Jack created. So I'm going to pull this into here. Whatever components. There's trading. Actually, let me clean this up even a little further. We're gonna go SRC. I really like the way that Jack codes. He's very organized. And move this into here. And then we want to move credentials into there. And then we want to move the .env into there. Okay, and then our components. Wait, what? No. So, what is out? Those not supposed to be there. Okay. So we have this. We have our main. And now we have our options helper. So I'm going to load in options helper. The way that we did that with boolean calls looks something like this: components, options helper. This is going to allow us to get that expiry date. And then we load in the options helper here. Options helper, little components. Okay. And then now we want to get the expiry date. So there's a bit involved in that. I think when we do this, it basically looks for when's the next expiry date. We have to pass it underlying asset, underlying price, expiry. So on TQQQ, so we probably want to do this on QQQ, right? Because TQQQ is going to be less liquid, right? So we want
Yes,
to.
yeah, definitely. Yeah. QQQ is more liquid. And then in terms of actually growth, the TQQQ is expensive because it's more volatile. So you
Right.
won't get much more results in it because you pay more, even though if it grows faster, you pay more for the premium to begin with. So QQQ is better trade than TQQQ anyway.
That makes sense. Yeah. So we get the current date. And then we need to get the price of the first one. So we'll go get last price. So I guess we'll go first we'll go symbol 1, symbol 2. The symbols. Okay, so we have those. So we want to go to, so buy 2, sell 1, buy 2, sell 1. Okay. Okay, I'm going to get those mixed up. So I want to do this here. I'll go like this. Okay, so buy 2, sell 1. So here we go 2. So we're going to get the current date, and we're going to go get the current price of the underlying assets. Okay, so get last price. Symbol 2 price. Symbol 1 price. There we have the prices. Then get the expiry date. Proposed expiry date. Right, so days 30, even AI thinks 30 is the right day, right? But let's go options, expiry days, 30.
30, yeah, 30 is good.
Yeah. Yeah, even AI seems to agree with that. Okay, so proposed expiry date. Then get the rounded price for the options. So we're gonna, I think this rounds it to the nearest dollar. Which I think if we look at the options for socks, right? I know QQQ, I think it's in dollars, right? Every dollar there's a different thing. Yeah, so yeah, exactly. Every $1 is a strike price. And if we go socks, what is this? Options.
You want to go by delta, right? You want to go by like 50 delta on that. So the 50 delta would be
I was gonna buy right at the money. I was gonna get whatever
the
money.
same thing. That's 50 delta and right at the money, same thing. Doesn't matter. But I mean, if you do 50 delta, it's gonna find you the best because you don't get the strike right at the money sometimes, right? But if he finds you the closest to right at the money.
Yeah, that's definitely what we're
Because
gonna do.
because it's not trading at right at the strike prices that are available, right?
Yeah,
So either way works better with the program. It doesn't matter. It's gonna be 50 delta anyway if you do right at the money, but
okay.
it won't be exactly trading it right at the money.
Right. We'll go options, strike. What do we call this before? We call this the strike. No, we didn't even do that here. We did this in one of our other algorithms where we go. Where is this? Spreads, Condor Martingale. There it is. If we go here, we call this the strike step size. Strike step sizes, and we'll go QQQ and socks. Socks is every $5. QQQ is every $1. Okay, so strike step sizes, strike step sizes. Get the strike step size for the underlying assets. Okay, and then get the underlying, get the prices, get the underlying prices rounded to the nearest strike step size. Okay. So those are going to get us, yeah, right. This just gets us as close as possible, right?
Yeah, that works.
Yeah. Okay, so those are our underlying prices. Okay, so now we'll go option 2. Actually, one more thing we have to do is before this. We have to figure out when is the next valid expiry date. So find the next valid expiry date for asset 1, or I guess for asset 2 we're starting with. Options helper, find next valid expiry date. Perfect. AI is doing what it's supposed to do. Okay, underlying. Okay, so symbol, proposed expiry date, but then we also need to give it no, it has to be asset, which is an actual asset object. Then we have the rounded price for 2. Then we have the proposed expiry date. And then we have put or call. This is going to be asset 2, we buy. So that's a call. Okay, so now we go create the option. symbol 2, option expiry date 2, rounded to price, and then it's a call option. Okay, great. Now the next one, find the next valid expiry date for asset 1, and then create the asset for 1. And then now calculate how many shares we buy of 2. This should be moved up here. I'll just kind of keep these two together, just group them. Calculate how many shares to buy, divided by 100. Current cash divided by the price divided by 100. Right, and then buy asset 2. Create order, and then submit order. Okay. And then we're going to do the same thing with asset 1, calculate how many shares, and then buy it. No. Buy puts for asset 1. Okay, so that looks correct to me. Let's run this in debug mode, make sure this works. If this works, we'll do it for the other side of it as well, and then we could run this back test and see what happens. Let's see if puts and calls make a difference. Right, and this is going to be pretty crazy. We're going to be buying a lot of puts and calls, so we might want to even change that. Back testing broker, get rid of all that.
At least not shorting, right? Seems a lot better.
Yeah.
That's risky, yeah.
Option helper has no find next valid option. Find next valid option. I mean, I guess this could actually just be that. I don't even know if we need to build that asset after this. I think maybe that even is enough. See if this works. We'll rerun it. Okay. So here we have a scenario. So symbol 2 is socks. The date is March 18th of 2020. The price of socks is $58. Right? And then we got a call option at a strike price of 60, expiring on 04/17. It is currently 3/18, so it's about 30 days out. Pretty much bag on. I found that. We're good. Okay. And then now we need to actually get the price of this. We're not getting the price. Get the price of the option. Right, that's something that was missing, but this, it looks like I got the right option there, which is really good. So we don't even need this. We don't need this code. And then we go get the price of the option. And this is using option prices. Okay. So let's do this again. I have a feeling we probably don't want to trade with half our portfolio. This is pretty insane. Well, let's see what happens, right? Maybe I guess because they're delta neutral, maybe it's not as bad. Because one's going long, the other's going short. Okay, so here is an order to buy 2 call options. That's surprising. It's only 2. We have 50,000 in cash. This option's $58. That seems a bit pricey. It's a 60 call. A strike price of 60. The current price underlying is 58. So 60. So it's a little bit out of the money. And the price is $58. That seems really high. Does that seem right to you guys? That's pretty crazy. Here's socks.
When what day was it today?
No, this is in 2020. We can
Oh,
do
okay,
it.
so
if
you
it's-
may be hitting the one of those high VIX days.
Well, it's March 2020. So yeah.
March, yeah,
Oh,
March was a crazy day. Yeah, so
yeah.
that's so high.
It's the middle of COVID.
Yeah, we want to look for a normal day.
Yeah, so maybe let's skip 2020 for now. I think we probably have to do a check for VIX. Like if VIX is too high, just don't do this, right? Something like that, right? Let's do 2024, right? Because it's closer to today,
Mhm.
right? And we'll run that.
One more. Mhm.
And that scenario never even happened. Okay. Wait, maybe we'll go back a little further. It never even had that scenario happen. We'll go back to 2023. There we go. Okay. So let's see. Option 2 price, $135. That's insane for at the money. That doesn't seem right.
132.
A 135 call on 2023 527. This thing, strike price of 135. The price of the actual asset.
What's the underlying QQ? Is it QQQ or socks?
This is socks.
Socks shouldn't be that expensive. I don't know how much is. I mean, I do socks L, so I don't know socks. How much is socks?
So say socks, the price of the underlying is 135.
Uh-huh.
And we are doing a 135 call. So call option right at the money. The price is 135
Mhm.
and 57 cents. Our strike price is 135. And then the price of that option is $135. That doesn't seem right.
Can't be. No, it doesn't make sense. It can't
Okay.
be that high. Is it 1 month expiry?
It should be about a month out. Yeah.
No, it can't be that high.
Yeah.
There's
That,
no
Like
way.
it needs to be both of those prices that we saw seem like maybe it needs to be divided by 10. Like if I look at a month of socks right now at the money, it's $12.30.
Is it per contract? Maybe. Yeah, that's right.
well, why would it be divided by 10? That
Because
seems.
that one was 130 something, right?
Well, let's see. Okay, let's see if it's doing the same problem with. Yeah, there's something wrong here. This is option 1 price 320. What is going on here? Asset type option, strike 320. 527 is the expiry date. Again, the expiry date right now is 427. By the way, KK, now that you're back, the problem with your thing is that you sell short. You shouldn't be using sell short. You should just be using sell. And with the change, by the way, this is what it looks like after we fix the bug. It's 4% a year. Right? So very, very big difference. Right? So sell short, don't use sell short, just sell. Right? But what we're working on right now is we're using options. We're trying to use options to trade this instead. Because if the pairs actually make sense, we need to get a little bit of leverage to actually make some money off it. So that's what we're currently doing. So just to keep you to get you up to date, KK. So the options price, yeah, 320 just doesn't make any sense at all. 320, the price of the underlying is 320. So there's some strange thing going on here that it's like the price is getting the price of the underlying.
How much is option? Option is how much is the price of option?
$320.
Is it per is it per isn't it per contract maybe?
No, that's never the way that the price of option.
Hmm. It's per share.
Yeah.
Something in the
Yeah, there's something funky going on.
code. Is it possible to see where the from the source how much it is? From the source that it gets it?
Yeah, hold on. Let me fix this here. Okay, and asset object for the option. Underlying asset. And this is asset dot asset type option. Let's see here. Option two price. Let me rerun this. There's something strange going on. I think it's getting the price of the underlying for some reason. I'm just going to reconstruct this here and see if this fixes it. Something weird happening. Option two price 135. Still, what the hell? Yeah, it's basically getting the price of the underlying. Yeah, it's 135.57, which is 135.57. It's the same price as the underlying.
Okay.
Yeah, it's getting its wires crossed for some reason here. I'm trying to figure out why. Maybe this has something to do with their theta data changes, Aochi. Because it's getting the price of a stock. It's not getting the price of
I was thinking about it, but not really, Rob, because the changes I've done only have impact on theta data, never touch the polygon side.
Okay, so let me well they are related, so let me see here. We're gonna dig into this.
Is there any way to check the actual price of the option? How much it is
I'm
and
doing
see
that right
where
now.
you can find it in the code somewhere?
That's not even the problem. Like I'm not concerned about that whatsoever. There's a problem where it's getting the underlying price. So here, option source, get last price quote, asset is still an option. So it's not that option source stuff that we added. So that's a good start. And then here we'll jump. Then get last price, get historical prices. And then we go into here, asset. There's call option. And then for some reason, whole source symbol bars. Let's go into Yahoo. Oh, that's why. Because we're not using Polygon as a data source. That's why. Okay. So let me set up Polygon here. So we'll go Polygon. I have that in there. Yeah, that's why. We're using Yahoo as a data source. That's why. Polygon. Actually, how do we Polygon data backtesting? Yeah, Polygon data backtesting. We go Polygon. And then it should have automatically pulled that. Let's see if our new feature works. That makes sense because it's trying to get the prices from Yahoo, and Yahoo doesn't have option prices. That's the problem. Okay, I'll run this. Please set Polygon API key.
Is Yahoo like a reliable data source for backtesting?
Yeah, but only for daily data for stocks.
I see. Okay.
Polygon config. Go Polygon config. API key. I think that's how it works. API key. Cool. All right, let's rerun this. There we go. This is looking like it makes more sense. It's pulling all the stuff from Polygon. Cool. All right, we don't need any of this stuff anymore. Yeah, and then in terms of back testing, you guys are asking Hochi. Yeah, it's because it's daily. Daily makes it run a lot faster. That is correct, Joel. Thank you. Good to see you again, by the way, Joel. I haven't seen you for a while.
Thanks. Thanks. Good to see you too. Congrats on the kid.
Thank you, man. Yeah, it's a lot of life changes since we last spoke.
Yeah. It's really great you do these live casts, live streams. It's inspiring to the rest of us who are using the framework on the daily, trying to or attempting to, learning to.
Thank you. Thank you. Well, I've been doing this for a while, so we've been doing these kind of things for the past few months. It's actually pretty fun to do. I feel like sometimes we'll find good things, sometimes we won't, but when we do find good stuff, it's really, really rewarding, you know? Yeah, I don't even think we need to do this as option 2. I think we just go like this. We comment that out. We just run this. Yeah, because we used to do a lot of those live classes back in the day. And you were part of a lot of those, Joel. Lately, we found that just building stuff live, you know, I think that's a lot of people find that very interesting. Instead of just learning how to do this stuff, you could just watch someone else do it, right?
Yeah.
Yeah. You're in the Bay Area too, right?
Yeah.
Nice, very cool. I should reached out to you. I was there a couple weeks ago. I should have reached out. I'm just remembering that now.
Oh, yeah, I wish I knew. Yeah, I saw the thing about your New York thing, and I was like, oh man, I'd love to go to that, but won't work.
Yeah. We're planning to move out to SF or like the Bay Area sometime next year, hopefully, if things go according to plan. We're trying to get into some incubators out there. So if we do move out to the Bay Area, then we'll definitely host a bunch of events out there.
Yeah, absolutely. Next time you're out here, just hit me up.
Absolutely.
Talking about like permanently move to Bay Area or
Not permanently, but for like a year or two.
I see.
You know, I don't know, maybe it turns into something longer term, but you know, my
It's a good
personal
idea, you know.
yeah, where I want to live long term, so I want to be somewhere in Florida, somewhere nice and warm. You know, that's
Yeah.
where I like to live long term. Bay Area is
I mean,
very
like Bay
cool.
Area is okay, right? Bay Area is kind of warm, never snows.
I find it kind of cold in the Bay Area, to be quite honest with you. Every time I go there,
Really?
at least San Francisco, it's always raining and cold.
Yeah, that place is. Mhm.
Yeah. Maybe outside of San Francisco, maybe like I've heard further up in the mountains or something like that. Like there are some
Right.
parts that are like nice and sunny and warm. But
Mhm.
San Francisco, like I mean, I wouldn't want to live in there for like a long term. It's just too cold for me, man. Like, you
It's
know,
crowded too.
yeah, and a lot of crazy people at night.
Yeah.
I was in San Francisco and like the people I went with, they went to bed. I'm like, you know what? I want to go out and just kind of see the city. Like I like doing that when I go to a new city, just like go out and see like the nightlife. And oh my God, I was actually afraid like walking around at night. There's some crazy people outside at night in SF. That is not something you want to do if you're like, you know,
Happened in recent years,
yeah.
right?
I'm not I lived in Mexico for a while, so I'm not someone that gets worried about that kind of stuff very easily, you know.
Mhm.
That's something else. There's some crazies out there.
Yeah, exactly. Well, like we've been discussing the same thing here, like with local people in San Francisco Bay Area.
Yeah.
Hmm.
But the other cities outside I think are very nice. You know, like Redwood City I thought was really, really nice. We walked around there. It was
Yeah.
Mountain View's very
Hmm.
nice. You know, like I really like those areas. SF,
Right.
I don't know about, but you know, the surrounding cities I think are very nice.
Hey
Yeah, come
Rob,
around.
Yeah.
If you're looking for like a partner or something there, check out Foster City. They got these lagoons, and then they got really nice apartments. They're very nice, and they're not very expensive. Check right across San Mateo. I lived there for like 4 years. It's awesome.
Oh
Check
wow.
out Foster City. It's very nice nice area, quiet, safe, and for kid, for your for your wife, everything. And it's the pricing is not too bad either. Foster City. It's a
Foster
nice area.
City. Okay. That
Right
sounds
across San Mateo.
okay. Foster City. That's where is that on the map?
You know San Mateo? San Mateo?
Heard of it. I don't know where it is.
San Mateo is right north of Redwood City. Right north of Redwood City.
Oh, okay. That's cool.
Yeah, right. No, yeah, right.
So,
So
like,
then across from freeway is Foster City,
okay.
San Mateo, and then across the freeway. So basically, yeah, Redwood City, north of Redwood City, you get to Foster City also. The other side of freeway, basically, like left side of freeway when you go from San
On
Francisco.
the bay side, I guess, right?
On the bay side, right.
Okay.
And then you can go on the bay. There's a very nice shore. You can go biking. And I used to go biking every day. Every day I went biking there. It's awesome. And
That sounds
so
very nice.
very nice.
Yeah, that definitely sounds my kind of speed. What the heck? This is it's not finding a price for socks. Does when did they start options for socks? Is this like a new thing? Because we're not able to find anything with this expiry. We
Oh, I don't trade that a lot. So I don't trade options on that. I don't know much about that. So
let's see here.
stocks.
Oh yeah, the expiries are not that often. Look at that.
Oh, so
Maybe
it's
it's
probably
monthly.
not very liquid either.
Yeah. Hmm. Yeah, it's August to September. That's 1 month. That's 1 month. And then this is a much longer. So I guess they trade monthly, maybe.
Sometimes.
Yeah. Well, at least they trade monthly in 2024, right? 2023, were they trading monthly? That's a good question. Like this has become very popular lately, so they probably started doing options on it recently. It's my guess. Let's try it. What if we did instead of 30 days, what if we did 90 days? It's pretty far out, but let's see. But yeah, I think it'd be nice to live in the Bay Area for a bit. I've always wanted to live out there. Like as a software guy, I'm like, this is like tech mecca. You know, like I wanted to live there for like the longest time.
Yeah, I lived there like 20 years, but then, you know, when you want to buy a house there, forget about it. So that's why I moved to Tacoma. It was like impossible to buy a house.
I saw on Bloomberg today that the Bay Area is the most expensive houses in the entire country. Like there's the median house price in the Bay Area is $2 million now.
Yeah, and it's not worth it really. It's just, you know, you don't. I mean, a tiny house. I mean, you get it like a really, really tiny house for 1.5 million. It's, you know, it just doesn't make sense. You can get a really fantastic house here with a view of Puget Sound and everything for what you get for an apartment there. So, you know, so why would I want to live there just to be there? Unless you have a job there, you have something there, it's worth it. Otherwise, for me, it wasn't worth it anyway. Long story.
Yeah, we're pretty mobile, so you know, like this whole business is online, so we've lived all over the place, my wife and I. But if we were to go to SF or if we were to go to Bay Area, we'd go there for like an incubator, right? We'd take this company through an incubator process,
Mhm.
and then we'd want to be a little closer, right?
Oh yeah, of course. Yeah, for you, it makes sense. Absolutely.
Yeah. So okay. So 90 days. So these options on stocks really don't trade that often. So I'm going to try 2024. This is what happened here in for this scenario. For the other scenario, this is where we do the purchase. If asset current position is none, get position. Oh, there's something like that we have to look at. Get position. So we'll have to make some more modifications here. If it's options, I guess we should take this. Go this here. Yeah, but the problem is that the options on stocks just don't trade that often, right? They don't have expiry dates that often. So that's definitely going to be an issue here. Let me see here, use
50
options.
delta, probably liquidity won't be it. At 50 delta, you won't have, I mean, you can get like 2 months instead of 1 month if you have to, right?
Right.
The liquidity won't be that bad because that 50 delta is pretty liquid anyway, and all options are. So
Yeah, right. But it's also just about finding them, right? Like I was doing this and it looks like they just don't have any options in 2023. They just didn't, or at least
nothing.
in a 90-day period. No, there's nothing. I was
Did it, did it? It
which is
must have existed. Maybe they started the options then later.
yeah, maybe.
Yeah.
Where is this?
Could it be something else like SPXL? Like a different triple leveraged ETF?
Well, SOX is not triple leveraged, right? And usually the non-triple leveraged ones are the more liquid ones with more options, usually, right? So this one probably has a lot of volume on it, especially this year.
Sucks. It's been, yeah, it's
Yeah,
small.
3 million average volume. That's not bad. Yeah, so I don't know what the deal is with these options, but I'm gonna try just 2024 and see if we can catch something in 2024. So that's there. Get position. This is for non-options. The current cash, this current cash, I'm gonna move here. Then we'll go if use options, and then else. This is the else component. This is when we use stocks. And then use options, I think. Let's see how well AI can do this. Get the symbol. 2, 3. Call on 1. And then put onto this. This seems like it will work. Okay. Thank you, AI. That's fantastic. All right, so let's see if this works here. Because apparently this scenario happens a lot more in 2024. No, maybe not. Maybe it was just flat. And then this happens. Oh, it's finding something. Price is not none. Awesome. It found something for QQQ. All right. Okay. So here's QQQ option price. So option is 446 call. And the price is 445. Great. So it's right at the money. It's $9 for the option, which means we could buy 52 of them. Cool. Good. Right, and then this is hitting that. Okay, non-existing expiry dates. Now it's trying to find these SOX puts. It seems to have found something. That's cool. 517, 419. It's definitely finding something here. Counter 90. But it didn't find. It downloaded some stuff. I guess the prices are just. It really just doesn't seem like these options are traded that much because it found them. These options here existed. And it downloaded the data, but I guess it couldn't find a price for them, is what it seems like. Get last price of that asset. And it just really doesn't seem like this symbol's trading that often.
Gosh, these bags are so small. It's dangerous business here. Ugh.
So,
No, it's probably not. Yes, probably not liquid or something. Do we do even
It's
any?
all right.
Just buying it at market?
Oh, these bags are so tiny. Dangerous business. I hope my hands are safe.
Sorry, Worth, what's going on there?
Hey, oh, sorry. I didn't mean to put you. I'm picking up dog poop. I apologize.
Like, what bags? What are you talking about?
My bad. I didn't mean to put you on mic. Sorry, guys.
No problem, man. Like, what bags? What are you talking about? Some
He
slander.
got a double personality.
I guess I turned my microphone on when I was picking up the poop. All right. Sorry, guys.
Okay, yeah, no problem,
I was talking about liquidity or something.
man. That's what I thought too. Oh, that's funny. Okay. Yeah, I just can't seem to find these, which I find surprising because it downloaded, but it can't get the prices. Makes me wonder if data will be better for this. Because they tend to have better pricing. And we added that recently, or Hauchi added that in.
Good time to get a try, huh?
Yeah, we could give it a shot and see if data can pick up these options because they definitely exist. This expiry date exists, this expiry date exists, and this expiry date exists. And it went over all of them, but it couldn't get a price. And my guess is the reason why I couldn't get a price is because there just wasn't enough liquidity, right?
Yeah.
Or maybe Polygon just doesn't have that data, right? Like in that
It could
specific
be, yeah.
way. Yeah. So try theta data. I'm gonna have to set all that up. If we do theta data, all I got to do is just switch to theta data.
Yeah, the simplest way is just here type like data backtesting instead of Polygon backtesting. Yeah.
Let's see if this works.
Mm-hmm.
It's the moment to shine.
Ooh. Oh, by the way, do you have do you have so the stock price is still gonna come from Polygon because you didn't pay for theta data for stocks, right? So put both Polygon and theta data there. So
Okay.
above theta data backtesting, keep the Polygon backtesting.
Okay.
Line 454.
Sorry, one second. I gotta do a bunch of other stuff before I even do that.
Yeah, sure.
I need the theta data here.
The
So
username, password.
yeah. Theta. No, it's not showing up. I need to get this from the one that you created. You created this one, this credentials. This one has data
Theta data, yeah.
config. There it is.
Mhm.
Okay. So I'm going to go here, credentials, new one with theta data.
Mhm.
And then I'm going to modify this env file. Sorry, I'm going to take this off screen for a second because it is a username and password. So I'm going to be a little bit more cautious about that.
Yeah.
What the heck is my theta data username and password? It's a good question. Theta data. There's my login. I'm assuming that's the same as username, right?
Well, you're still showing us. You want to take your screen off?
No, this I don't need to do because this is hidden. You're not going
Okay.
to password.
Okay.
But the question is, data password. You're not going to see that, but what is it then?
You definitely have it on CI. So check where you set up your CI test.
Yeah. Well, I'm just wondering if it's the email, right? Like if it's the email that you said. Data config. Data config username, password, and I'm assuming my email is the username, right? Let me try logging in. Let me try logging in here. So data.net, log in. Yeah, it's my email is the username, I think.
Yeah.
Okay. So there it is. Save. Cool. Move this back here. Let's see if theta data does a better job with this.
Ooh. Cross finger.
Truth.
Yeah. Beyond theta data backtesting, include the Polygon backtesting. In line 454. Yep. So put both Polygon backtesting and theta data there.
Okay, sorry. So 1 second. I'm still working on this first thing.
Oh yeah, no problem.
Where's dot back to why isn't it letting me go into this? What is this? Backtest. Def backtest, and then we have to go. I don't see theta data API key here anywhere. How do I put in the theta data API key? Or the
But it's merged into that, right? You should have it, right?
I mean, I don't see it as a possible thing to use for backtest. Maybe let's see how you did it in here.
Which branch are you on for Lumba?
I'm on the latest dev branch.
Latest dev branch in the underscore strategy.py. I think it definitely should have that arguments as input.
Data
Let me
use
double check on.
password. Yeah, maybe you put under run backtest, but you didn't put under just backtest. Right? Run backtest and backtest are two separate things. Run backtest, I think all backtest. I think it's something,
Yeah.
something like that.
Yeah. Okay.
Okay. Yeah, and then if you put into backtest, then it also gets added to our documentation too. That's the other important part. Okay.
Yeah.
so-
Yeah. Mm-hmm.
So theta data backtesting. So I should put this in as like this, like polygon data, like that.
Let me think. Yeah, let's give it a try. Yeah. And
Let's
this moment, I want to yeah.
Backtest
Was it a
source.
dictionary or was it a list? I think it was a list.
This is, I don't know what the heck's going on here. I don't know what this is. What do we have to do here?
Oh, you have that. Okay. In that case, just put a backtesting data source class to replace your polygon backtesting, data testing, that brackets, that list, replace it. Yeah.
So what should I do
Yeah.
here?
So line 454, replace whatever you have with the backtesting whatever class, that long variable.
What long variable?
How about this? Let me double check. I gave you an easier solution because you are hacking it, right?
I just want to put in the data source, right? I mean, it's,
Yeah, I got it. Let me see.
I think it's something like asset type.
It's
Backtesting.
a
So does it come back as
dictionary.
dictionary?
Yeah, it's a dictionary. So yeah, okay. So Rob, if you want to use that find data source classes, if you want to use that function, so basically,
Something like this.
so use this line of code when you let me type it to you. Zoom, where is chat?
Is that how we do it?
Use this line.
Right, but what does that turn into?
Yeah.
So this is like adding a bunch of. Like,
Oh, I see. You're manually typing. Yeah, let's give it a try. Yeah.
Would this work? Stocks, options, asset type.
Yeah, I think so. I think it's just
So asset type. What
yeah,
is that?
I think so.
Asset type. For
Yeah, I
asset.
gave you a dictionary for stock. Use polygon backtesting for options using data. I think
That.
it should work.
Yeah, let's keep it simple instead of having all this extra code.
Mm-hmm.
I don't know if it's gonna work on that, but let's see.
Mm-hmm.
Theta data config. This is spelled wrong. The error option. So is it like this?
Option, big option.
Stock. Yeah, we should add this to our
Yep.
document.
Started.
Okay, cool. Okay, and then options helper goes here. I don't see it downloading anything.
Oh, this version it doesn't show yet, but
Okay, so you're gonna add that in that it's actually gonna download something.
yeah, the new version will do.
Okay.
Oh wait, maybe it shows too. Yeah, let's see which version this is. Yeah.
If you require API support, the operation couldn't be completed. Unable to locate Java runtime. I don't know what's going on here.
So may not start successfully. Did you put the right password username? It tries to, it tries to start that server for the data.
Right.
But it doesn't go successfully. I think this process will run like 16 times until it,
Okay,
gives up.
So let's leave theta data for now. I mean, it's
Mhm.
Sounds like we have to fix them. But okay, so Polygon, when we're running this, we can't seem to get data for socks. I don't know. I feel like we hit a bit of a dead end here, unless you guys want to try a different pair, right? But we don't have any data for that. But this should work. I mean, if we had the data for socks, this should work. They're still getting the positions, we could do that whole thing.
What was the specific reasons they chose these two? So if we knew what was the reason they chose these, then we can find a substitute for them, I guess. Something more liquid.
Yeah, I don't know why those were chosen.
So maybe we can work on it next time then.
Yeah, maybe. To see if we own options for the underlying assets yet. Position asset symbol. This one we said, okay, if it's not none, is none, and is none, then we actually trade these. Okay, so I mean, I think this code should work. I can't test it because we don't have these don't have the data for this,
Yeah, is he still online?
I don't see him. Oh no, wait, there he is. Yeah.
Okay, so can we ask him if we can substitute some other assets if he's
Yeah,
hello?
Yeah. Do you have some other assets that we could trade, KK? I think you're at
SMH. I think that's what he said.
SMH or SMH.
SMH.
Let's see. SMH. Semiconductor. Let's
Is it
see
liquid this one?
let's see the options. Oh, it's a little better. Yeah, they're more often. Okay, so maybe we do SMH instead. Well, SMH. Let's see if that works. Then I just added in this thing where it checks. I'm just gonna finish that off because I just want to finish that thought. This is there. We go current date, and this goes positions. So get those and then get positions. Here, okay, get all the positions, and then loop through, right? And then if okay, let's see if this works. Love AI. It's amazing. Okay, cool. So let's rerun this. Let's see if it works on SMH. That seems like a more likely thing to work well.
But I have an idea. Like before we go to break or after we come back from the break, try to run that martingale condor with theta data because that project everything is well set up, right? So now if you run it, you know if your theta data is working or not. If it's not working, maybe it's password username, right? And we can come back to this.
Right. Okay. So let me first finish this. Key error SMH. Why strike step sizes? Oh, because I didn't update this. I need to put in SMH, and what are the strike step sizes for it? Looks like it's every dollar. Oh, even 50 cents actually. Every 50 cents. Oh no, wait, no, $2.50. It's 250, 250, 250. Okay, so 250. Yeah, this is definitely feeling a lot more liquid. Okay, so there we go. Now it's, I think this is where it's looking for it. See if it downloads some stuff. I found a price for QQQ. Okay, that's not that exciting. Okay, it's a QQQ price. Submits that order. Cool. Buying QQQ. Now let's see if we can find price for SMH. I found the price for the put. Perfect. Beautiful. That's much better. Now we actually have this. Okay, so we are going to buy call 446 call expiring 4/5 for Qs. And then 225 is also expiring 4/5, so expiring on the same day. And it is currently 3/4, so in pretty much exactly much. So SMH is looking a lot better. This looks like it actually will be good. And then the price is $9 for that first one, 940. So almost the same price, actually 9.7 and 9.4. And then we're spending 50 grand on each one. Boom. All right. I'm not seeing the portfolio value here. I'm curious how this is. Okay, so here, $8 for this one. And $11 for this one. Okay. It's doing something. Portfolio value dropped quite a bit. We lost a bunch of money. That could be for a lot of different reasons. I guess we're not selling these options. We're in this case, we're holding them to expiration. Or selling them when things flip.
Oh no, we should sell them the same time that he sells probably the stock, right? So to be consistent with his code, we should
Right.
be selling the same time he sells the ETF itself.
Right.
And
Which
to be
I think
in
is
line.
in this case, this does sell all, exiting all positions. Right. Oh, it made some money. Oh, it made some money. 108 grand. We're up. 120 grand. We're up.
All right.
We're making some money here, guys.
But he starts with 100, right?
Yeah. Well, I mean, 20%, that's not bad, you know.
Not bad.
Pretty big drawdown. I mean, it dropped down to 60, but it's up. At least it's making money so far. I'd say that's a good start. We could, this is a pretty short back test too. So, okay, asset. Yeah, I get it. Okay, wasn't able to find a price. Um, if we can't find a price, then cancel. I guess we should do this. We should go buy one and buy two. We have to first make sure we get both prices, and then we can go ahead and make these purchases. right? If we can't find the price for the options, we go, this will go okay. If we got price for both, yeah. If we didn't get a price, then don't buy them. This here. Let me rerun this with this fix now, because there are still times where it doesn't get the price. It's a bit odd, but it's okay. It should run a lot faster this second time. And then we can go back further. We'll add like an extra year to it. And we'll see if this thing does well over a longer time period. Yeah, there it is. It went drop down to 60, drop down to even 50 at one point. That's easier to see now. Now that we have the caching. And it's gonna run this again. Drop down to 40, 80, then 105, 108, 120. That was a big drawdown. It dropped a lot. But I guess it's also we're trading half of the account in each one. That's a pretty gutsy move. Current cash option price. Oh yeah, I need to move these two as well. One more adjustment. Move this into here. And we'll move this into here because we didn't get a price. And we can't do much without a price. So it's there. And then here we go price. Once you have the price, then you can do this. The price, we do this. Okay, I'm gonna rerun it now. Yeah, that makes more sense. We'll check if we get the prices. When we have the prices, then we can actually go ahead and do all this. Okay. I think we could speed up our back testing a lot if we have like, we almost have like empty files for when we can't find prices. If we did something like that, I feel like we could speed up our back testing a lot. I thought someone worked on that one time, but I guess that never got done yet. Okay, so we're at 120K. We made some money. 113K. Yeah, we don't have anything that sells them yet, but it does sell when the paradigm shifts. So we kind of have that as the thing that sells. Okay, while this is going, I'm going to start a back test from 2023. See how it would have done over that time period. I don't know why it's not finding anything. A bit odd that now it's not finding prices. I found them fine before. I mean, it seems to make some money. Like this is up to 104,000. It's taking a very long time to finish. For some reason, it's not able to get prices here near the end. Hit 102,000. Level 3, 510, 517. It's looking quite far out. Okay, now I've found that. Let's go to queues. Taking a very long time to finish. I mean, maybe there's something to this. Like, I mean, some of these are actually doing pretty well. This one isn't down that much. Yeah, I don't know why this one can't finish, but it's at 113,000. I think if we just shorten it, we figure out what the heck is wrong with it, but just shorten this to like that. It should work fine. This 2024, run over 2024. Okay, there we go. So it's going pretty quickly now. Okay, so here's one of them. Wait for that tear sheet to show up. It did make money. It was up 9% over this time period. That's a big drawdown though.
Yeah, it's most of the time is actually under the water.
Yeah.
So this, I mean, that's just coincidence that makes me. Yeah.
Yeah, I don't know. It could be a coincidence. I mean, there's a pretty short backtesting period.
Yeah.
But I mean, it did end up. I mean, that did happen. Yeah.
Well, was what the experiment, just to try, I guess.
Yeah. Okay, let me try running this as a longer back test. I'm gonna run this from 2022, and then maybe right now is a good time to take a break because it's gonna take a second to finish this back test anyways. Seems to get stuck on certain times, but I don't know about you guys, but I need to use the bathroom. So right now seems like a good time to take a quick break. What the heck? Can't create new thread, add interpreter, shutdown. What? Okay. All right. Anyways, I'll be right back, guys. Is this? There it is.
Okay.
All right. Hey guys. Okay, so this seemed to have crashed for some reason here. Access denied. Requested TQQQ bars. Oh, we're going too far back. Well, I guess because it's using this for the machine learning or something. I don't know why we're getting bars that far back. It's a year prior. Okay, so whatever, we'll do from 2023. That's okay. Which I think this one is doing. This one's down so far. It is taking quite some time to get these prices. So while we wait for that, we'll see how long this one's probably gonna take some time because it's having a hard time finding data. That's what it seems like. Required parameters. Yeah, but this one's down though. This one's down to 91,000. So I lost money anyways. 91,000. Doesn't seem like it even traded that much. Okay. 104. So I made some money and then I lost some money. Now it's sitting at that point. So what do you guys think? I mean, what are your thoughts so far on this? I'm gonna take a step back for a second. Where do you guys want to go next? This back test will take some time to finish, but so far, I don't know. This is looking like it could have some potential, right? Maybe if we use different pairs, maybe if we change some things about it, right? Maybe it will do better. But as of right now, this is looking like a maybe to me, right? I don't know if you guys want to try some other things with this, or what do you guys want to do? Let me know your feedback. Personally, my thoughts are maybe there's a good stopping point for this algorithm. I'm starting to think maybe that. It looks like there's some prospects here. We could probably work on some improvements to the way that it's buying options. Maybe it buys them more in the money. Maybe it buys them at different dates. Maybe we do 2 different assets. That all sounds like could be interesting.
If the original one can be improved, so at least it creates something like a reasonable return. I mean, that 4% is not really impressive.
Well, the problem is that there's no leverage with this, right? That's why we start doing options, right? Because I mean, the Romad's not bad. That's okay, right? I wouldn't write home about this. Like, I mean, a Romad for me, anything over 2 is pretty good, right? If I see a 2, I'm like, okay, that's a check mark. That's an interesting algorithm, right? It's almost at a 1. I think if we were to do the stock market, I think the stock market has a Romad under 1 because let's say from 2020 until today had a drawdown of 35% and a return of 12 or something. So it probably has a Romad of 0.5. So this seems like it could beat the stock market at first glance. It seems like it could do double the stock market just based off of this one number, right? But the problem is that you need to add leverage to do that, right? And in order to add leverage, how are we going to do that, right? We could use options to do that. Maybe we could use futures or something like that to add some leverage. Can we trade futures for stocks? You know, or is there something else we could do like that?
But this is from 2020 to 2024. How far it comes to what date in 2024 to when does it stop?
This one is 2020 January to the end of 2023. Is
Or
that
end
what
of 2023. So the stock market outperforms this.
on a purely return basis, yes. But if you're looking at the return versus the drawdown, it beats the stock market. Right?
Right.
The stock market, the Romad over this is a 0.5. We got a 0.95. So that makes it interesting. Risk adjusted, it's better than the stock market.
I see what you said. Yes.
Yeah. It's double the stock market, actually, risk adjusted. But the problem is that we need leverage, right? 4%, I mean, no one's really going to write home about a 4% return, right? But if we could somehow leverage this, then we can get to 40% return and a 40% drawdown. That becomes more interesting, right? And it's delta neutral, so there's advantages there. It's not going to have the same correlation. It could be a pretty good thing to add to a portfolio. So I actually think this is pretty interesting. I do see potential here personally, right? But how do we actually trade it, right? How do we make money off of that piece, right? We need to add leverage, right?
So
and options is one to add leverage. Right?
I think he had the right idea to do like TQQQ and SOX L. So that's triple leverage.
This is that. This
Oh,
is
this is that.
yes.
I was thinking maybe we could try it on Forex.
Yes, we could try it on Forex. We could definitely do that. That will take some time to set that up. I
Yeah.
don't think we've ever back tested a Forex algorithm. So that in itself is gonna be a lot of work. But yeah, maybe that could work. You know, we could do some sort of thing like that. Futures, Forex, something like that. So I just got a message here. Yeah, 1x. Yeah, we did this, KK. That's this graph here. This is using TQQQ and SOX L. So they're both triple leveraged. This is also kind of unrealistic though, because this is assuming you could short with 50% of your account SOX L, which I don't think a broker will actually let you do. Right. So this is also kind of unrealistic. Right. The initial thing is interesting, right? Is just how do we add leverage to it to actually take advantage of this, right? And options, I don't know if options are the ideal thing to use here either, because options, you have a bunch of other things you have to worry about. You have to worry about what's the price of volatility and what's this and what's that. Like, you know, if we could use something simple like a futures thing or something like that, or
Did
maybe
we
we do some crypto. Like, I mean, I can see a bunch of other markets for this working with. Right.
Rob, did we sell the options correctly? Actually, did we sell it right on time?
No, I'm sure there's a lot that we can do to optimize that.
Okay, so yeah, I mean, if you sell it at the same time that he's selling it, then you're matching his algorithm. But if you're not matching his algorithm, then of course not gonna. So if you wanna just amplify his results with option, basically you wanna just sell the same time he sells exactly. And then you can see that if you see that amplification, because that should work basically. That basically should work theoretically. And even if its options is volatile or whatever, if the stock moves, the option should amplify that move. And there is not much to it to that. But since we're not just we don't. So what are we doing right now? We're just holding the option to expire, and then because if you holding the option to expire, then it might just lose its value from where he's selling it. By the time you hold to it expires, it doesn't necessarily stay at the same price that he's selling it. So that's why it's probably not matching his results or improving his results.
Okay, so something that we could do to improve on that is, and I hope the AI does correctly. So this is stock 2, and stock 2 we're going call. No, we need to make sure this is puts and calls. And
As long as we came this far, we might as well get it.
yeah,
What I'm saying,
yeah, that's fair. Okay, right is put. So symbol 2, option 2 should be call. Right dot lower equals call, right? And then put, right? Because we check if we're on that symbol 2, symbol 1 is a put. So check if we already own those puts. And symbol 2 is a call. Check if we already own those calls. And then if we don't own them, then this is the key here, right? We go self.sell all, sell all positions if we have any. Right, this will at least kind of satisfy what you're talking about. It's going to just sell when the regime changes, right? Which seems to happen pretty often. Okay, so we do that. So symbol 1 is a call, symbol 2 is a put. So check if we already have it. And then now we go here, sell positions if we have any. Right, there we go. Selling all positions. All right, so this should improve it a bit. I want to figure out what the hell is going on with this pricing stuff. You may be missing da-da-da. There's something going on where I can't find prices. Let's fix that. It's not letting us finish these back tests, which is a little annoying. Okay, so we're back testing. This is from 23 until today. Yeah, I mean, I think this general idea is a good idea. And the reason why I think this is a good idea is for a few different reasons, right? Is first of all, because of that what's it called? The Python notebook, right? I think for one, like that shows that there's some interesting things here. Number two is that we actually get a pretty good result. I mean, the return is low, but the ROMAD's good, right? That makes me think that that's pretty interesting, right? Because our drawdown versus our return is actually pretty good. And then third of all, I know someone else who's working on a pairs trading algorithm, and they also got good results too. So from many different perspectives, I'm seeing that this is probably something good, but maybe we need to change the asset type. Maybe we need to change a few more things. Let's see first of all what's going on here. So this is getting for SMH 1222 call. Maybe 30 days is too short. Let's go maybe 60 days. Still having trouble finding some of these prices. Data would definitely come in handy here, because I think they have better pricing data. And they have bid and ask prices, so we can like fill at more realistic prices too. There's a lot of good things about data. You figure out how to get it to work. Maybe while we're at it, Hauchi said to just run this. This is working with data. Oh, that's rolling calls. Martingale. See, Martin.
Time for theta data.
Well, I'm just going to test it with Martingale, see if it works at all.
Yeah.
Right.
I'm expecting C2.
Yeah. Well, I guess I don't have data. How do I even set this up? How do I do this?
Is this the martingale? Oh.
Yeah, this is the Martingale. I just want to see if we can
in the martingale. Can I see your run backtest?
run backtest.
Yeah, run backtest function. Okay, here we go. Yeah, that's good. Okay, so go to the top.
Okay.
Top
so
there is where you set your backtesting dates.
Yeah, so 1 second.
Mm-hmm.
I am going to put in my password in here as well. Just give me a quick second. Copy it over this. Stated data definitely has better data.
Right.
Okay, there you go. Data, we put that in. Cool. Yeah, and maybe it's not going to have all these gaps in data like Polygon does.
Okay, so
yeah, let me change this up. Run this normally. Run this in debug mode.
but this file by default is gonna run with the Polygon.
Oh yeah, so how do I change
So
that?
if you want to run theta data, you gotta go to a level. No, not here. You come back down.
Yeah, it's just Polygon here. Yeah. Where is it? It's at the top somewhere.
Yeah, it's where you set your dates. Yeah.
Dates,
Here
right
we go. Change the option to theta data.
Option data. Okay.
Now you're good to go.
Okay. That's pretty. Okay, so data source classes. This is still saying Polygon here. Backtest data source classes.
Can we give it a try? Like,
I'm just trying to see where this comes from. I'm gonna put some breakpoints here because this seems to be the thing that isn't working.
if it's going through Polygon, in the downloading, it's gonna say Polygon.
Yeah.
The logs will tell it's Polygon.
Yeah. Oh, that's why this is. 'Cause I'm running backtest in parallel. That's why. I'm gonna just turn that off. Or when you want to get stuff done quickly, but when we're trying to debug, it's really adds complications. Okay, so yeah, option theta data. Okay, good. That's doing what it's supposed to do. So backtesting data source classes, stock. Okay, theta data and option. Okay, cool.
Yeah, too.
Oh, this is different. Yeah, this is the actual class. That's different than the way that I had it set up. Okay, and then, or at least I think I did. Okay.
Yep, now it's starting.
The jar have been killed.
Mhm.
Now it's running.
This is house cleaning.
Yeah. Okay, and then
Now
downloading.
it's launching that. Yeah, I think you have something wrong with the username password. Yeah.
Yeah.
Mhm.
Okay. I don't think so because I just logged in with it. Like the username is your username in email.
Yeah, email address.
Yeah, and the password.
With
That's
whatever.com, right?
Yeah, I logged in with that directly. So that shouldn't be an issue. Maybe it has something to do. It's saying unable to locate Java runtime. I don't know, maybe there's something else going on here. But yeah, why don't we go over that together, Ouchie, on a call? I think we have a call scheduled on
Yeah,
Friday.
let's go through it.
We'll go over that on Friday. Because maybe it works on your computer and for some reason it doesn't work on mine or something, right?
I mean, it also passes CI, right? So it definitely can launch.
Yeah, that's true, actually. That's a good point. Yeah, I don't know. We can go over that on a call. For now, I'm
Yeah,
just
we
gonna
can debug step by step. Yeah, later.
yeah, I'm just gonna use Polygon for now.
Mhm.
It's enticing this idea of theta data. They really do have a lot better data for options.
Right, it's more complete.
Yeah. Have you tried theta data trying to get like QQQ, like for example, Jack was trying to do this. He's trying to get and actually Ali was even talking about this earlier today. Getting call options 90 days out. Can theta data do that? Because Polygon can't. They do not have that data.
Yeah, never tried that.
Try to go 90 days out for something really liquid like QQQ or SPY, and recently something like in 2024, 90 days out. So like today, like for example, today is like the 13th of August. 90 days out from today would be expiring in September, October, November. Let's say expiring mid-November. Can they get data for it today?
Maybe it's good thing to add it into a unit test, right?
That would be, yeah, absolutely.
Yeah.
Yeah. That'd be a great thing to add to
I'm
it.
gonna look into it like in the next few days.
Yeah, because if theta data can do that, then all of a sudden we can now do different types of strategies. Like what
Yeah.
talking about 90 days out. If theta data can do that, then all of a sudden we have a new strategy we can make, right? That's super
Right.
valuable, right?
Good point.
Yeah, and I have a feeling Theta Data can, especially since they have bid ask prices. Maybe they don't have the price of the asset, but we could assume that would get filled at the ask price, right? So, like that would help a lot too, right?
Yeah, with bid ask
Yeah.
and long expiration.
Yeah.
Right.
Yeah, I think that would be very interesting.
Polygon doesn't have all the options that are available every day for backtesting.
So Polygon has gaps in its data.
Oh, so I mean that would be a very common thing that people would want. I mean, 90 day is a very common practice.
Yep.
If they don't have it, it's really a bad, I mean, very, very big thing that they are missing. Because a lot of option traders want to have a good runtime and they do 90 days. It's not something that's a rare thing. So I don't, anyway.
Yep. Yeah, that makes a lot of sense to me. And that's why Theta Data is so appealing, right? Because maybe they have that, right? And if they have that data, then all of a sudden we could do all these new types of strategies, right? Okay. So here I'm trying to find, so it keeps getting stuck. It's not able to get the data for SMH. So maybe I should, let me see if I can pull this up on my computer. If we go, this is stuff from last week. Okay. I'm gonna go on my computer. I'm gonna search for dot feather. And I'd like to know feather. How do I search for that? Anyone know how I could search a Mac for? I'm looking for any extension that any file that ends in dot feather. You guys know how to do that on a Mac? I thought this would be the way to do it.
Try the star before it, I guess. I'm not sure, but that may work. The star and that's it.
Star dot feather. Nope.
No.
I'm trying to find out where these files are getting stored. Dot feather. What the hell? I swear this worked before. Maybe because I'm not showing extensions. How do I go search? Is there some way that I can kind? Okay, kind other feather. Say QQQ. QQQ feather. Where the hell is it getting stored on my computer? I think it's somewhere go back to here. Mac. And it's like library. Where the hell does this get stored again? Oh man. Let me ask ChatGPT. I think that'll probably be the best. How do I use terminal to search my Mac for any files ending in dot feather? Find. Feather. Somewhere on my computer, because what I'm thinking is I want to open up these actual files with this data and actually see what data we got. That's what I'm thinking. I don't remember where this gets saved. Feather. Cache file, and then cache file. Cache folder. When we bought cache folder, there it is, somewhere here. This is, let's see. Okay, so library caches, that's where it is. Okay, so library caches. What's the next part? Lumi Wealth. I don't see that. That's not where it is. I guess I have to go Mac. Users. There we go. And then I go library. No, that's not it. What the hell is this? My old computers is very easy to find. Cache. Hugging face. No. Oh my god, why is it so hard to find? Why don't I just do this? We'll go. Here we'll go cache folder. We'll just find this. We'll run some sort of back test. Under Martingale. Edge back testing true. And I'm going to find this folder because I want to actually open this up and actually see what data it's looking at, because it seems to be having problems getting this data. This is the cache folder. There you go. Bitmex, Polygon, Yahoo. Polygon, CD, Polygon. Probably have a crap load of stuff in here. Yeah, look at all this stuff. Options. Okay. Minute Feather. Okay, so I want to find the folder is Now I'm in that folder and I want any files with SMH. Okay, so there, that's how you do it. Find. There's all the SMH. Quite a few of them. Now let's say, how do we organize these? These are is that day, month, year, or something like that? Has SMH been around since 02? Sorted by name. I don't know what this minute splits is. But calm. Yeah, so there's all the data there, but okay, it's gonna take a lot of time to get into. We're trying to find this call. So 2024-05-13. These are all the files. Let me see here. Cache folder. This year, month, day, expiry string, year, month, day. So I guess it's looking at stuff that's expiring that far in the future. 35, that doesn't make any sense. 3501, 3401. 23, this makes more sense. Yeah, honestly, we're having like issues with getting the data for SMH. Like that's kind of the biggest problem here, right? Is that it just doesn't have the data. Maybe if we change. Not finding for QQQ. I was not finding for QQQ. So asset. Expiry is 8/20. Now this is looking at 8/20. I guess expiry is changing here. Expiry gets incremented, the original expiry. Okay, so I'm looking at Latoya, what you wrote here. What info are looking at further dated contracts for Polygon Theta data? I can find all available expiration strikes on Polygon, and I can find quote info on it. An example of finding options contracts for SPY for specific strike, you would need to put API key. What is this? This is contracts. So I'm not sure what you're doing here, Latoya.
I was just trying to figure out, you said you were looking for options contracts 90 days out, and I was trying to figure out what information from Polygon was missing for that.
the historical data. So if you're like January 1st, 2024, get an expiry three months out and try to get prices for that. And you're not going to get
Got it.
that.
Okay.
Or maybe we get it, but it's very sparse or something like that. Honestly, that's kind of what I was trying to do by looking at these feather files, because I want to understand better what data is actually missing, right? Here's okay. Here, this finished. That didn't do very well. It did one trade and it didn't do the trade correctly. It's just not finding data for these options. Maybe what we do, option expiry days, let's just lower that. Let's lower this to 10. That's probably not the ideal situation, but this will probably have more data. Yeah, Polygon's data, just like when an option's expiring like far in the future, they just don't seem to have that historical data for the prices. Okay, 10 days seems to be doing better. Just 30-day expirations just weren't working very well. This seems to be doing better. Did a good trade and made some money. Oh, made money again. Oh, this is actually working out. Wow, this is working out very well. 161,000. Holy crap. Maybe this will work. Big drawdown. Is moving a lot. But overall making money. This is a lot better. 10 days expiration is actually making more sense. But it's probably doing some stuff it's not supposed to. Oh, and just blew up. Well, it was doing well. I placed a couple good trades. It made a bunch of money here. Big trade, big win, and then it placed a bunch of trades here and lost money and blew up, basically. But that's interesting. That seems so 10 days expiration actually seemed to work. So if we go back to I don't know why I do 2022 here and then Polygon starts yelling at me that I don't have the stock data. Why is it looking that far back? I don't know what this is doing to get that historical data. Yeah, historical data, 1,000 days. That's why that's something to do with this machine learning algorithm. Let me see if I can upgrade my Polygon subscription to be able to handle that. Polygon.io. Let's see, my stocks, I pay $29 a month. For $79 a month, we can go back 10 years. That's an extra $50 a month. We can try that out and see if that works. So let's upgrade this. And then now we go back further. Go back to 2022. And maybe do like 15 days to expiry or something. Because the last 10 days are not great in terms of expiration dates. Last 10 days, there's a lot of theta decay, so you don't really want to be holding those. Saying does not allow you, I just upgraded it, so what are you talking about? Consider backtesting time frame, blah blah. No, I should have that. Dude, try again. There we go. Okay. Yeah, I guess all these options back here in 2022. Let's try. '23. Put 8-1. 15 days. Maybe we try 20 days to expiry. See if that works. From 23 onwards. Okay, so Hochi says, I think the earlier issue of meeting, try to launch data is actually a Polygon side. Did you set a Polygon API key in both? Yes, I did. I did do Polygon API key for both. That's not the issue. And KK says lunchtime here. Okay, cool. It's crazy that you're having lunch now. I'm like ready to like pass out. Slowly starting to fade here. I'm gonna share what we have right now to our GitHub. Added options trading, and maybe you guys can figure it out while you guys working on this, because like I said, I think this is interesting. There's oh yeah, so you made 138,000, like that's up a lot of money, but then it blows up near the end. It's definitely taking on a lot of risk. This is buying half the account in each option, which is a little crazy. It seems to fail near the end. It makes money, and then at the end just collapses. So again, I think there's potential here. This seems like there's potential, but it seems like we need to dig into this further. And my brain is slowly starting to not work anymore. It's past midnight. 131K. Oh, there you go. Here's an interesting result. Let's see if this actually ends well. Oh. It's up 50% almost, 46,000. That's pretty good. So that's at a 20-day to expiry. I think if we made this longer, instead of 20, we make it 30 or 50. But the problem is that we can't get data for 30. So that theta data thing would actually be quite valuable here. If we could figure out how to get theta data to work. But for 20 days, we seem to be getting a pretty good result. 20 days to expiry. And I know the way that buying puts or calls works, the further out you buy them, generally the better price you get for buying them long. Because the theta decay is better the further out you are. So this is looking interesting here. It's 817 or 6.
Hey Rob,
Yep.
what kind of tickers like would you think would be interested in throwing into some like unit test, for example, SPY, options, 30 days expiration. Maybe besides that, what other tickers? that you think would be worth it to do that?
I mean, SPY, Apple, Facebook, Google. I mean, like all those seem pretty.
Okay.
Yeah.
Okay, I see. The pretty much the most popular ones, right?
I mean, it depends.
Significant 7.
Depends what you're testing.
PQQ.
Like, what is the test about, right?
Mm.
Right, like if you're just testing if it works or not, then you can just stick to SPY and just use that. But if you're testing like things
Right.
like lack of liquidity or something, then you could find like very small tickers, right? We have to, I don't know them offhand because by nature they're small, so I don't think about them, right?
Right.
Yeah.
Yeah, I'll give it a try manually, like,
Okay.
next few days, and
Okay.
I'll let you know.
I mean, it'd be interesting to try SMH since we're currently working on that, right?
SMH, yeah.
SMH, yeah, we're currently doing that.
Sure.
But here's how this turned out. It made money. I think that this is an interesting idea. I do think it needs refinement. I do think we need more data to be able to go longer term. But I think this is an interesting idea, right? This made 30% a year, big drawdown, right? But either way, what I'm going to do is I'm going to share this. I'm going to put this into our strategy library so you guys can play with it, right? And then you tell me what you think, right? There's the tear sheet, and then I'm going to open up the tear sheet and I'm going to share the JPEG reveal and finder. This is the current status of it. And then I think maybe now is a good time to call it a night. This is interesting to go over this, you know. I think this can make money. I really do think so. But there's gonna have to be some changes to it. ML pairs trading, and then this is JPEG. Okay. Added back test results. Okay, so this is all updated. You guys can have at it, see what you think. I'm going to share this to our channel. I'm going to go here. We're going to go into live algo building sessions. Oh, someone's actually talking about it. We just spent the past 4 hours working on it, and it's in the strategy library with options data. The existing code, the original code had a bug in it. Here, okay, then here's the result that we got with options. It's interesting, but definitely needs refinement. And then we'll go GitHub, and here's the ML pairs trading, and I'm going to share this in here for those of you that have access. Okay, anything else you guys want to cover before we finish up? I think there's a good stopping point here, or at least my brain. Yeah, my brain's not working so well anymore. This is interesting though. I like I said, I legitimately think that there's a lot of value in pairs trading in general. And this seems like it's a good strategy for us to do that. We have a framework here. We could put in different tickers. So we can actually test this with different pairs. Maybe we test this with futures, Forex, maybe something like that works better. Maybe options, but we do options for different types of things. Maybe we go Facebook and Google, right? Do that pairs trading.
Mm-hmm.
Meta and Apple, maybe that makes sense, right? I think there's a lot of interesting things that we could do here. All right. This is a good framework to get started with that. And you know, guys, have at it. You know, that the code's there. You guys can use it. Let me know what you guys can find. All right.
Cool.
Anything else you guys want to go over before we finish up for the night? Cool. All right. Well, it's been a pleasure. It's been fun. Was hoping that we could find something that had some crazy 5,000% returns or something, but as usually is the case, whenever you find something that's that extreme, there's usually some sort of problem with it. But we did find the problem, so that's good. That's number one. We found the problem. Number two, we did find that there is some value to it, which is awesome because there's actually a differential there in terms of the actual return versus drawdown. So there's interesting things there. And then we started working on the options part of that to try to actually take advantage of that differential. And that didn't work out extremely well just yet. But I do think that if we put in some more effort there, maybe we pick different expiry dates, maybe pick different symbols, something like that, I think could be quite profitable here. At least that's what I'm seeing on my end. All right. Hope you guys have a good night. It's been a pleasure. Cheers.
You too.
Good night, guys.